participants to occupy their seats. Thank you. Chairman has arrived. He starts it. Good morning, everyone, once again, and a very hearty welcome to the second bi-monthly meeting of all life insurance companies. Our chairman, member life, other honorable members, the CEOs of all life insurance companies, reinsurance companies operating in India, Secretary to Life Council, Care Health CEO, and Swiss Re India CEO. All these participants are present here. I would like to first extend a very warm, hearty welcome. Before we start the program, I would like to give a very brief outline of what we have as agenda, or what is the program schedule. I will first ask Member Life to speak. He will give his welcome address. This is followed by our chairman's keynote address and presentation. Then it is left to all the participants. There is an open house for interactions, and which is followed by lunch between 1:30 and 2:30. Mr. Naveen Tahiliani, Tata AIA CEO, he will present the issues pertaining to reinsurance which life insurers face, and of course Swiss Re CEO, Swiss Re India CEO, Mr. Hadi Riyash, he will respond to that. And we have a presentation by Secretary to Life Council, and we have a presentation by Mr. Anuj Gulati, he is CEO Care Health. He is going to speak on the corporatization of Insurance Information Bureau. And we have a presentation on IFRS today. And then we have another open house. We have closing thereafter. It's expected to close around 4:30. And we have a dinner at Secunderabad Club, 7:30 p.m. So all of you are invited there also. So this is the program for the day. Friends, I have shown you one picture. Your worth is known by what you seek. our respected visionary chairman, Shri Devasish Pandaji, he has rekindled our spirits and exhorted us for a very noble superordinate goal, that is to reach out to every Indian citizen and provide life insurance coverage. And following the Prime Minister's guidance of Sabka Saath and Sabka Vikas, in this mission of reaching every Indian and provide life insurance cover, Chairman Sir has thought wisely that all should be taken along in this mission. So as part of the outreach for all stakeholders, he has also conceived a bi-monthly meeting with all CEOs of life insurance companies. So we had first met on 6th April, and now this is the second bi-monthly meeting on 30th June we are holding. So a goal without a plan is merely a wish. So this day, the deliberations, we will work out how do we reach it, what is the plan. So that is going to be the crux of the deliberations. And to set the tone, I would request member like Sri K. Ganesh to come and give his welcome address. Thank you.
Good morning, friends. Respected Chairman, IRDA, my colleague members from IRDA, all the CEOs and other officials from the various insurance companies, Secretary Life Council. We also have the CEO of IIB and my colleagues from the authority. It gives me great pleasure to welcome you all to this, the second Manthan. This coinage of the term has happened now, but I'm sure from the 6th of April deliberations till yesterday, the thoughts that began there in Mumbai and the events that have followed thereafter already gives a glimpse of how the thoughts that we have discussed there in Mumbai have brought to shape, to the extent that they have brought in these changes, I'm sure, have made a lot more interesting expectations from you all. The Bima Manthan is also expected to come up with churning of new ideas which will open new vistas. The same success story that happened probably last quarter or last year, continuously repeated, will not guarantee the same results. So we will have to go on innovating. We have to go on churning new ideas and seeing what tweaks will make it even more interesting for us in the business. And today we are gathered here in Hyderabad for the Bima Manthan, and once again I warmly welcome you all to this session. Looking forward is the theme of the meeting, but as we all know from practice, we are always guided by taking a very conscious thought on what have we done to bring us to this point. So which is why I would like to first of all begin by commending all the life insurers, the CEOs and all your people in your organization, that the start of this financial year has been very, very promising and auspicious. An overall growth of almost 87% in FYP, that translates about 42,420 crores, and 39% growth in total premium, which is 94,547 crores at the end of May 22, is a very interesting beginning. Cynics might say, sir, you are counting this growth on the back of last year's low numbers, but I'm not going to go by that. Last year was a story that is already over. This is the year that we have begun well, and I'm very keen and very optimistic that we can only grow stronger, because the initiatives that have been taken in these last 2.5 months, it will require some time for it to settle down in the operating areas of your office. And I'm very confident that the initiatives you have already put in, the thoughts that will lead to some more activities going forward, will really bring a new climate to insurance solicitation and insurance penetration. So once again, my heartiest congratulations to the entire life insurance industry and all your people for a very, very good beginning in the year. Friends, I have mentioned this many occasions and I will again repeat it. One of the benchmarks of life insurance is all about the settlement of claim on the due date or even earlier. And this is an area I am really proud of the industry. Each and every organization, you have put in your best efforts, notwithstanding the challenges. And if we have reached a claim settlement ratio of 98% in 21-22, I think is really a tribute to all your people. And once again, my heartiest congratulations to all of you for this. There will be always a little up and a little down when you look at individual companies, but I'm sure the CEOs are already looking into them. And as we go forward, I think we can iron out those chinks in each of these companies that may require some attention to. I will request you to kindly keep tracking this because, as I personally believe, that is the moment when the efficacy of life insurance actually is felt by the claimant or the family. The third area, of course, is an area I would always seem to talk about is the persistency. Persistency in life insurance is indicative of the quality of sales done and the satisfaction the customer has had in the journey of life insurance with the insurance company. Penetration is also linked to the total premium, and for that reason, persistency remains the top of our focus. Now, over the last few years, there has been a greater focus on the 13th month persistency. And this definitely has brought about good improvements across many insurers. But friends, I'm sure as you look into the column of 13th month, you will also be looking across the column of the 25th, the 37th, the 49th and the 61st. I'm sure some of you are not comfortable with the drop in these numbers beyond the 13th month. This is an area where we need to further engage, and I'm sure for your company, you will pay greater attention to understanding why does not a customer persist with me beyond the first 2-3 columns of persistence. The longer he continues, the greater the chances of not only he, but his family to continue their association with your company. This is something I will really request you to. A couple of more points on customer grievance. You are aware of the grievances that have been registered. Numbers have come down, but that should not be the reason why we should feel happy about it. Are people really getting an option to tell us in case they are unhappy? Or are they simply letting it go? Because that, according to me, is not a good sign. If they at least articulate it to us, we get a chance to understand their pain, examine our systems and processes and do better. But if they just walk away, then probably the mistakes that we are continuing to have in our systems and processes will continue and it may not be useful for us. So this is something we need to further look in on a regular basis. The root cause analysis, the system correction, needed actions against the errant intermediary, all these are critical. And I would urge the CEOs to spend some time as often as possible to examine this aspect of this work. Chairman has been talking about the visibility and perception management of not only the IRDA but also about the industry. I will certainly compliment the industry and the Life Council for your campaign that you have started, Sabse Pehle Life Insurance. I'm sure as it gathers more momentum, this will go deeper into the minds of both the readers in the publications and those who watch it on television. Because once they start realizing that this is what is ultimately life insurance all about, maybe it becomes easier for the intermediaries to go to the marketplace and complete their solicitation process. The last but not the least, how are we as far as technology of life insurance in our industry, in our company? Have we got the best, or are we still playing catch up? Because friends, just look at the last 2 years. When we are talking about COVID as a problem, COVID actually has been a blessing in disguise for many, many areas of economic activity. Unthinkable. Until recently, we had to go out to buy something. No, we are just not even bothered. Everything is, you place the order and the money comes, the delivery comes to you. They are clean, they are safe. And many, many things have happened thanks to COVID also. So is the technology that we are employing to A, attract the customers, B, to retain them, to ensure that their periodic requirements are met properly, and lastly, at the time of settlements, whether we are in tune to what the customer expects of us. I'm sure today's Manthan is going to help us to channel a lot of these ideas, go back to our drawing boards and see how do we implement some of the thoughts that we can gather from us. Once again, a very warm welcome to all of you for today's program. Thank you.
Thank you very much, sir. Leading from the front is the motto which the chairman sir leads. I would now request him to come and address all of us with his inspiring speech. Thank you.
Very good morning to all of you, and welcome to Hyderabad. We thought after the Mumbai meeting we'll shift venues, and in that series the second one is happening here in Hyderabad, and I'm sure you'll love to be in Hyderabad, spend a day and have some lovely food in the evening, which will be typical Hyderabadi cuisine. We'll have the non-life insurers also with us in the evening for that get-together. We have with us all the life insurance companies represented by their MD and CEOs. We have the reinsurers. We have the CEO of IIB, and we also have the CEO of IIRM. All my esteemed colleagues, members are all here, along with all the senior officers of IRDA. And the idea behind this regular engagement is to understand the expectations from each other, and also the commitment that we have made to you and the commitment that you have made or you are going to make to us. And all this journey we want to traverse together for the larger goal and the larger interest of reaching out to our people, our citizens, and provide them with the much needed protection. We are looking at not only the people who are at the bottom of the pyramid, they are the most important ones, but we are also looking at the middle class, we are looking at the millennial population, we are looking at the farming community, we are looking at the MSMEs, the micro entrepreneurs. So in India, we have a diverse kind of income groups. So how do we reach out to them? And perhaps for all of this, maybe a differentiated approach, a one-size-fits-all may not be the appropriate solution. So the idea behind, again, today's meeting is to also sit and do some kind of a brainstorming. As my colleague, member Live said, that the beginning has been very auspicious. So how do we carry forward so that the entire year is going to pay us good and rich dividends in terms of our efforts towards deepening the insurance penetration, enhancing the density, and covering more and more lives. And also at the same time try and provide the much needed income protection to people who age. So, and of course the grand vision is that we should have a fully insured society, every life should be covered. And the target, of course, is not 2047, but much before 2047. If we achieve that, that will be great. But 2047 will be the 100th year of our independence, so by all means, we should reach that target. Now, how do we reach there? We have to work hand in hand, we have to work together, not alone with you all, but also the other players who are part of this ecosystem. We'll just run through a brief presentation which will take you through the the last meeting and what all has been done thereafter. So I'll just quickly touch upon a few slides and then we can open it up for discussion and take forward the agenda. So if you can just recall on the 6th of April when we had our first meeting at Mumbai, these were some of the issues which were agitated during the meeting. It was there from my side and it was there from your side also on the extension of the use and file procedure. Then of course the reduced compliance burden, the formation of the thematic working groups comprising of industry and the regulator which was constituted by the council. Then we talked of the monthly open house meetings in order to even address individual grievances of our stakeholders, meaning the industry and the other intermediaries, and also welcome suggestions for further improvement in the regulatory approach or if there are any other specific issues that would help growth of the industry. Then we talked of bi-monthly meetings. We talked of even carrying out certain amendments to the Act. Now, if you look at the first row, all of it has already the process begun. The use and file, we have done whatever we could do in the first instance, but that's not the end of the journey. As we go along, we can even further, remove the other restrictions, but we would like to see the response of the companies, watch, and thereafter take the next step. But by and large, I think all the products, excepting for annuity, pension, and savings have been kept with the regulator to give their nod, but all others have been completely freed up for the industry to take their call. And I'm sure with this approach, the industry will be able to launch innovative products, will be able to give a wider choice to the consumers, and even pricing, I'm sure, for a period of time would further stabilize. The second set of boxes here talks about the review of the commission structure and the cap on the EOM, speedy regulatory approvals, principle-based regulations, enlarging the scope of distribution, and revamping the grievance redressal system, and also enhancing insurance awareness. The last pillar has to be a continuous journey, and my colleague has already thrown some light on it. We will deliberate as we go along during the day. The review of the commission structure and the cap on EOM is being, the report of the committee has already come, being deliberated upon. Regulatory approval, I think I'll talk about it in more detail when we go to the next slide. Can we move to the next slide, please? Now, what are the expectations from the industry? Enhancing insurance awareness is, of course, the key pillar for us to undertake this, I would say, a challenging journey. Then strategies for the unserved and the underserved market. It has to be a very, very definite strategy, well thought out, well planned, and well executed. Orderly market conduct, and we want this to be again a top priority to build the customer's trust and the confidence in insurance as a product. Listing roadmap, we talked about it in the first meeting. I had a privilege and chance to meet with the chairpersons of all the insurance companies. This was also discussed with them. It becomes even more important in the context of when we are talking of now aggressive growth targets. How do you mobilize more capital? In that context, we are not asking you do it even right now, but a roadmap for you and your board, for your board to also understand would be useful in pursuing the agenda of reaching out to millions of people who are unserved and underserved, for which you will require additional capital. Then I think the other pillar talks about mobilizing capital for growth and expansion. And data security is something, again, the more and more we go towards digital and technology modes of solutions, I think we have to keep in mind the data security part. So we'll talk about that also as we go along. Move to the next slide. Now, the first one we have already discussed, and all we have said is that this use and file will be completely within your purview, but you need to have a board approved policy, and then you have a product management committee where you have your key functionaries, the chief actuary, the CRO, the CDO, the CTO, and the CCO to be part of that process along with the CEO. Then rationalization of regulatory returns, the journey has already begun. I'm sure you would have got the feedback to the circulars that have been issued. And even now, what we are doing is also whenever we have such a change or modification made, we also issue a press note so that it is there for the benefit of all the stakeholders. So the offline returns actually have been reduced from 40 to 4, almost a 90% reduction. Online returns have been reduced from 8 to 5, about a 40% reduction. And the certifications have been reduced from 3 to 1. And the work is still in progress. The next talks about the very important flagship program of the government, and actually which has in the last 8 years been able to enhance our penetration in a big way. So this particular flagship program had taken a back seat because of the issues concerned around the revision of premium. The claims ratio didn't commensurate with the kind of premium that was being charged. So the government, with our efforts and persuasion and engagement, we have brought about this change now in the premium rates. And not alone that, now at IRDA we have also reduced the solvency requirement by close to 50%. And this actually will free up capital of around 500 crores, which will help in further, putting this money into coverage of more and more people under the PMJJBY. Then the next item is the revision in premium, that is from 330 to 436. Then the last pillar is about the thematic groups that were formed under the councils. Next one, please. So these thematic groups have submitted all the reports. In fact, we had received 7 reports. The last one came in last night, which is pertaining to the regulatory, the regulations rather. So that committee report has also come. I think that was chaired by Chairman LIC. So we have received that report last night. Now, the monthly open house meetings is essentially, I would like, in fact, not to wait for 2 months for this bi-monthly meeting to happen. If there are issues, your representatives would come and voice those issues, particularly with regard to any specific issue of the company or a generic issue which may help the industry as a whole. We have already conducted 3 open houses, and the response has been okay, not too overwhelming, but yes, fairly good response. Then certain good suggestions have also come in through those forums, and we are examining them internally and following it up. Now, the second important thing that we have done in this period between we met last and today is that we have launched 5 mission mode programs in the IRDA. This is actually basically going to take care of a host of issues that also concerns the industry. The details are in the next slide, which will come up. So I'll explain that in details. The next, I did speak about how do we mainstream technology. So InsurTech is something which I think we need to mainstream into our scheme of things, because that brings in a lot of efficiency that will help you in reaching out to the deeper pockets where we haven't yet reached. The speed and efficiency through technology is much faster than what you could do manually. So InsurTech is something which we are trying to mainstream and forefront in every scheme of things. Would expect the industry also to consider this proposal as something which is going to actually benefit. If we don't embrace technology, we are going to be left behind. Any company that feels that no technology, why should I invest? But if you don't invest, there will be somebody else who will take away that slice or that pie. So we are trying to, in our scheme of things, also build technology, even incentivize technology wherever we can, so that more and more of you start adopting technology in a big way. You don't really need to create technology. I think co-creation or partnerships, collaborations will help adopting technology faster. We were really pleased and amazed to see in Bangalore, we had the first InsurTech conference, which was attended by more than 200 players from the InsurTech world, and more than 100 insurance industry players were also present in that conference. And the wonderful ideas, whether it was AI, ML, blockchain, I mean, all kinds of stuff were presented there by people who actually have, created those solutions and technology. Some of them are being adopted by some of you, but there are many others waiting, knocking at your doors to give them the chance to, partner with you and take forward that technology solution. We also intend to continue this process of having these conferences in different venues. Bangalore was the one being the hub for all the startups. We thought we'll start off with Bangalore. The second one, we intend to move to Mumbai and then, of course, to Pune, Chennai, and then Delhi. So that is tentatively the program, but we can have many more. And we would like the industry really to understand the benefits and the value that is the technologies are going to provide, and give them the chance to also, partner with you. The next major intervention that we are making in the technology space is to also organize a hackathon. We have already announced that. The problem statements are almost ready, and very soon we will be announcing the launch of this hackathon. And we are incentivizing them by way of, they get some monetary reward. They can straight away get the approval for launching of that particular solution, or they will immediately, we'll try to tie up with one of you so that straight away they start working. So that's the kind of incentive we are proposing to build into this hackathon. And again, this hackathon will be a continuous process. It's not a one-off kind of event, but it will continue periodically so that we try to mainstream technology in our scheme of things. Sincerely hope and pray that if it comes through in the forthcoming, monsoon session, it will be great for us. So that is what our expectations. I'll go into that. I mean, basically, the amendments talks about the value-added services which the industry was in favor of, and the demand was that we should also have a specific provision for the value-added services, which will allow you to set up your own subsidiary or a joint venture, charge a fee, and provide the much needed or the demand of the industry for value-added services. Then we are also talking of relaxing the entry barriers so as to allow different kind of players, whether they are micro insurance players or regional players, or for that matter, niche players. So all of that will find space once these amendments are made. The other issue, which was a nagging point, is regarding the renewal of licenses for the intermediaries. We do feel that probably that provision which has been embedded into the Act needs to be amended to provide more relaxation, and maybe a perpetual license would be a much better method of allowing the intermediaries to operate and on a continuous basis without any disruptions. So that is what we are also proposing. And then a few other suggestions have also been made with regard to the hard coding of the investment guidelines which are existing in the provisions, that we want to make it more free so that they could be framed through regulations rather than going strictly by the provisions of the Act. So these are the major recommendations, and then there are a few more where the changes are being proposed and they have already been sent to the government. The next slide talks about the thematic groups, and now we have got the reports of all the committees, internal deliberations, discussions, the pluses and minuses, what we can do in terms of providing more relaxations wherever required or wherever we need to, take care in terms of mainstreaming certain things. The distribution channels, how do we make them more efficient? Whether an open architecture or opening it up further or what, I mean, all the pros and cons, because there are various stakeholders who would have their own viewpoint. So we want to take that journey a little more carefully in order to consider the viewpoint of each and every constituency before we take a final call. But most of it we have already, we have had our in-house discussion, so very soon we should be able to come out with the draft exposure, and then after we receive the comments, take it to the final stage of amending the regulation. The next one is the one I just spoke about relating to the mission mode programs. And the first and foremost here is about developing and implementing a risk-based supervisory framework. Currently we have a compliance-based framework which really doesn't talk much in terms of the risk profile of the companies. And as regulator, I think we should be very much aware of what are the risks sitting in the on the companies, whether it is the balance sheet or otherwise. So from a compliance-based to a holistic risk-based supervision is what we are looking at. And also trying to bring in the holistic supervision of insurance market in line with the international standards. And this effort will actually enable us to understand the risk profile of the regulated entities, whether it is the operational risk, the management risk, or the financial risks, the liquidity risks, and so on and so forth. So basically, this attempt of bringing this framework will also help us from treating each and every company with the same lens, from a one-size-fits-all to a more customized approach to supervision. And the supervision intervention also will be proportional to the risks. So IRDA would like to engage with you all so that whenever we are ready with that framework for implementation, we do not want a surprise for any of you. So we move in tandem, move in alignment, so that we understand each other, and all of this we want to put it on a technology platform. So it will be a supervision through technology, which we normally, it is known as SupTech. So that is what we are trying to move towards. Then the next item is on also establishing a framework for risk-based capital. This is also the want of the industry, and we also do feel that this regime will help in freeing up capital. We don't need to lock capital wherever the risk doesn't commensurate with the kind of capital that is being presently asked to be reserved. So this also work has already started. Again, here this engagement will have to be on a continuous manner. This may take a little longer time than the RBSF. The RBSF, we are intending to actually, if all of you work together in tandem with the regulator, then within the next 6 to 8 months, we should be in a position to launch. And whereas the RBC may take a little longer, and that is what the experts also say. So maybe that should be a timeline of within the next 2 years, we should also be able to come up with the RBC framework. Again, here the engagement of the regulatory team here, we have a dedicated vertical now. We have a lot of officers who are well qualified in the subject, who have an understanding. They have already, some work had been done in the authority some time ago, so we are taking it forward from there. In a mission mode, we want to accomplish this entire task. As we go along, we may even get a knowledge partner to work along with us. We are looking at the international best standards. Teams will be visiting other regulators across the globe. And we would like also the expertise which is currently residing in some of the companies, whether it is insurance, reinsurance companies who have global presence. They are also should come forward to help us in partnering with us to take this journey forward. Then the next item is with regard to the IFRS 17 and the India's the global accounting standard. And we all understand the global accounting standard will have to be implemented by a definite date. So we need to also start working immediately. So another vertical has been created. And I'm sure that with this adoption of these standards, we will be able to improve the comparability, then it will increase transparency. It will also provide users of accounts with the information that they need to understand more meaningfully and also recognize the insurer's financial position. So investors also will get the comfort of putting in their money into the insurance companies here in India. So we'll make a brief presentation today in the afternoon on the IFRS in days and the expectations from the industry also, how we undertake this journey together. And then, of course, developing an ecosystem for InsurTech. This will be one of the allied technologies for the insurance sector, will be one of the top priority items, which we will be continuously monitoring. And in the second conference, we also would like to see a few MOUs being signed between the insurance companies and the InsurTech companies. So I would like to alert all of you to start working on those lines right from today itself. Then the next item relates to strengthening the grievance redressal system. Now we have something called the integrated grievance system, but probably that integration hasn't happened in the way it should be. More of data related analytics has to be done to, we have to deploy those analytical tools in order to understand the root cause. In order to understand from where these complaints are emanating, whether it is a region, whether it is a district, whether it pertains to a particular company or one or two companies, and also whether it relates to a specific policy or policy condition. If there is something that we ought to do in terms of making modification or amendments or corrections, we will be very happy to do that. Similarly, the insurance companies will also have to, whenever I have been meeting a lot of people, the only issue when they raise before me, sir, people will be willing to buy insurance. But equally important is that they should get their claim and claim in a seamless manner and on time. I'm glad to inform you the other day, I got a message from the ICICI Lombard MD. Lombard is the non-life company. And in the newspapers also it has come out that the turnaround time for MSME claims up to 5 lakhs, few hours or couple of days. So 10 days, that's the max. So they are further trying to reduce that time. So I think each one of you should be worried about the customer satisfaction in terms of the claims. Otherwise, they will not persist with you. They will lose faith in the product. They will lose faith in the system. So I think more important is that the CEOs should monitor. And in fact, as we go along, we are even proposing to have an index where we will publish on the website the kind of claim settlement and the turnaround times of each of these companies for the benefit of the customer. This will only enable all of you to compete with each other and move up in terms of your claim settlement and the turnaround times. And that will actually enhance the customer's confidence, their trust in the product and in the system. We are in the process of revamping this whole portal in a manner that whatever I have said gets captured, and also we go a couple of steps forward in trying to also make it multilingual, so that in different languages people could read, understand. Person feels very elated. Yes, somebody has called me and asked me whether his or her claim has been approved and what was the level of satisfaction. And each of you will also have to build a similar system within your own organization. You need to create an internal ombudsman within the organization. I think we are also working on those lines. Probably we will be issuing some kind of advisories to all of you to also put in place an internal ombudsman system. A committee has also been appointed to look at the ombudsman system, where we have this 17 ombudsmen across the country, to make them more effective. To probably they will also recommend if they need to be given more powers, they need to be given a bigger mandate. So once that committee reports comes to us, then we will look into it, and we will also share it with you for your comments, your views. But having said that, I would request you to definitely go back to your drawing board with your team. Look at your own grievance redressal system and make it a more robust. The next slide essentially talks about the regulatory approvals being rationalized. In fact, we tried to figure out from each of our verticals or departments here as to how many approvals are required and for what. So we have looked at that and we are trying to reduce or minimize so that you don't really need to take approvals for us. We do believe in you. We do trust you. So each of our teammates here, my colleague members and the senior officers are working on that so that that will reduce your compliance burden and also help you in the much needed ease of doing business. So the ones which are in the pipeline is that we are modifying or rather enhancing the caps for the other form for raising other forms of capital. That regulation also should be out soon. That should give you a much needed relief of raising the capital from the markets, and also contemplating to do away with the prior approval so that as and when you need to raise that capital, you can straight away go to the market. We are also proposing to amend under the section 48A, the appointment of common directors. If you not come here, we will provide you with a framework through which you need to you can appoint your own common director. You don't need a prior permission. We are also examining that whether we can even allow you to fix the remuneration of the CEOs and MDs, where we will define the bands relating to certain parameters. So that is also under works. So hopefully we will come to some kind of a solution there. The current format of registration of intermediaries for the renewals is embedded into the Act. So we have to follow that procedure. But then we are trying to streamline our own procedures that maybe the first renewal, second renewal should become automatic based on a declaration in the form of an affidavit by the intermediary. So that's what we are looking at. The team is also working on that so that it will be like you just get a declaration based on that, the renewals automatically happen. Then next one. Onboarding new players. I mean, you may be wondering why am I telling you, but you are the ambassadors for us as well. The word of mouth will definitely go around the entire ecosystem and the new and interested players. That if tomorrow anybody is interested today, tomorrow to set up a company, then the NOC, the prior NOC is required before you can go to the ROC and register yourself. So that is going to be an automatic generated process where they register and then they get the NOC, a printout, and then they can go to the ROC and register. And once they have done that, when they file the application here, then there will be a guidance document which is now going to be uploaded on the website. Presently, you don't have any guidance document. So one needs to understand what is the expectations of the regulator in terms of filing their application, which will give the regulator necessary comfort. So that guidance document or in the form of frequently asked questions have already been framed and they are being uploaded on the website. That's the second one. Third one, the moment a new application comes, there will be a facilitation cell. And two officers from the regulatory setup will immediately pair up and do the hand holding for that particular unit till they get their registration. We are planning to, we are going to insist upon the new player to complete the process between two board meetings, that is between 3 months. So the pressure now in the last month and a half or 2 months, we've already given clearances to about 13 proposals, and the pressure is on them now. They are saying, wait sir, we'll come, we are in the process of getting ready, stitching up a lot of things and putting things together. So we want more and more players to come, huge market, and our effort to reach out to every Indian will require more players to come in. And as I said, more differentiated players technology-led players, micro players, medium-sized players, and the big have to grow even bigger, and the small ones today present here have to grow big. So that should be the attempt. And we are here to provide the absolute, hand-holding in terms of any requirement that you may have from the IRDA. As I said, we are trying to delegate most of it to all of you. You don't need to come here, but if there is anything, then that will be done in express speed. That I can assure you. The next point relates to the regulatory framework, and all of us are, rather dismayed to see the number of regulations, guidelines, and the number of circulars that are in it. A new player comes or the existing player will go mad. So the process of consolidation and doing away with the redundant ones, coming out with one or two master circulars for each line of business and one or two regulations is all we are looking at, which will provide you the much needed ease of carrying out your activities. So that work is also on. We are also now moving more towards the principle-based regulation. No more showing a rule for everything. The expenses of management we have already mentioned. We are already working on that. And the regulatory sandbox, yes, we had, and particularly of interest to the life insurance companies, that the time which was given was 6 months, perhaps not adequate for life insurance products to be tested on the ground. So we are going to expand that scope, and the applications for a new proposal was in the cohort. There were 2 cohorts, but now we are going to make it a continuous basis, which means anytime anybody can file their application for a for an approval under the regulatory sandbox mechanism. The committee is also being reconstituted to include people who have actually understand the subject, who have gone through this process, so they know the pain points and how exactly this journey has to be undertaken. So that committee also very soon will be in place, and a new set of regulations will be issued soon. The next point relates to the intermediary channels. So first and foremost, we have been talking, I think I spoke on the first meeting that we all had with regard to whether we can create a channel which is from amongst the community, like akin to something which the banking system have, which we call the Bima, the Bank Mitra. So here we are talking of something called a Bima Vahak, who will carry the insurance to the people to their doorstep. And we want this, carefully thought through, and a women-centric force can be created to reach out to every household. And why women? Today you see more than 50, I think some survey has come out with the finding that 55-56% of the decision making or spending is decided by women in this, which is very good. It should even grow more, and we expect that to grow more. The sex ratio also has now improved. We have more women than men now. So all of these augurs well for our country and for our economy as well. So women will have the power of convincing that yes, this is something which is essential for the family. They save the money, they will be able to put it in insurance and get the desired protection. So I think we'll have a small committee of the stakeholders to sit and work out the details, whether we should have this independent individual Bima Vahak, or you have a corporate kind of setup like you have corporate BC network, which will be a better one for the insurance companies to administer, or we should have both. All of this, and what is the kind of incentive that they should get, whether it will be commission or it will be, all those issues will have to be now carefully considered in consultation with the industry. So we will constitute a team to deliberate on this, and we'll ask the council, the secretary is here, I'm sure you take note of that. So we can start this process and maybe at an appropriate time get it launched at the highest level. It will give more focus and attention of the entire the country. So this is something we need to work on. The next point is on on creating a technology interface between the banks and the insurance companies. This is particularly in the context of the JJBY and SPY. The government has already set targets. We are also expecting the same from you, but in a much lesser span of time. Now, today, only a few companies are operating in this ecosystem. We want every life insurance company should contribute towards the growth of this scheme. It is a low ticket item. It is very easy and simple process of onboarding. And if there is a technology interface, so right from the moment the individual details are captured, it can all be done through the help of technology, so that every digital footprint is completely there with the banking system. The same information gets transmitted to the insurance along with the premium. And as today, none of the PMJJY beneficiary have a policy. Policy may not be possible. There is a master policy, but a certificate of insurance has to be there. A lot of people die where the breadwinner of the family dies for some reason or the other, but the lady of the family doesn't know that there is an insurance. So how do we make sure that the nominee also gets the information? So through mobile, we can transmit the certificate of insurance, and also through SMS, we can give them all the details. So you have the nominee details, everything is captured right from the beginning. So here also some InsurTech, we are going to make this a problem statement in the hackathon. Hopefully somebody will come with a solution. So the bank API with the insurance company will help in, better claim processing, more coverage, and with speed we can do that. All I would like to request is that all the companies will have to partner in this process of taking this program forward. I've written to each one of you, and I'm thankful that you have all responded with very positive, on a positive note. But now you have to set target for yourselves. We have indicated the broad targets, but then we have to work towards that. The partnership, we even want to make it completely an open architecture as far as these two schemes are concerned to begin with. Then the next one is the Bima, with the IGMS, the Integrated Grievance System in the portal. We want to rename it as Bima Bharosa, which the common man would understand and relate with. IGMS sounds Greek and Latin, so people sitting in the remote corner of the country wouldn't understand. So therefore, this will be something which people can relate with. So the work is on, and I expect this to be up and going soon. So this will help in addressing the grievances of the public. Then the last bit is the impetus to the insurance awareness campaign. So here again, on one hand, the councils, we don't want each of the company trying to spread the same thing, but how we can distribute the work or pool the resources. IRDA will do its bit. We have already started the process. So IRDA, of course, will talk about how people can repose more trust in the product and what are the do's and don'ts. So that kind of stuff, like the other regulators do, we will do. We are going to quickly onboard some creative agencies, the ad agencies, and start this process. And we are going to have a 2-3 year media campaign. We want some celebrities also in the field of sports or otherwise to work with us for this journey of reaching out to people. Similarly, we want the councils, could be council led. So the insurance awareness campaign has to be run in a very concerted manner, in a continuous manner, so that people don't lose sight of you. Continuously, if you keep hammering these points, then it gets embedded into the mind of people. So that is something also we wish to see quickly, and before we launch, if a presentation can be shared with the IRDA team here, so that we are in tandem, that what we are doing, what you are going to do, and what individually the companies will do. That will be useful in our effort of deepening insurance penetration. Talking about penetration, the next is about the life insurance penetration goals. So this slide, essentially what we are trying to show is what is the current level of our penetration and how does it compare with the world average. And if you compare with the G7 countries, then we are much behind that. So how do we reach there as well? So we have looked at the GDP growth, how it has been forecasted. We've looked at the inflation. Factoring all of those, we are trying to project that as we move forward in the next 4-5 years, how we can grow, and what should be the CAGR at which we should grow. Because if the GDP grows and you don't grow that much, then obviously the density, the penetration would come down. So it has to commensurate with the GDP growth as well. So keeping that in mind, we have tried to project what will be the CAGR and try to also project some figures in terms of how these companies are going to grow, and that will be the assigned target, which we will deliberate further. So FY23, we are looking at a growth of from 3.34 to 3.64, 24, 4.15, then 4.73, 26, 5.4, and then 27, 6.18. We'll be still behind the G7, but at least we will be close to what some of the G7 countries are. So in order to achieve this insurance penetration goal, then next one. Yeah, this will be the business target that the entire insurance industry need to accumulate. This kind of premium is what you have to write. So in FY22, you have done 6.91, about close to 7 lakh crores. FY23, you have to reach 9.17. FY24, it will be 12.18. 16.21, 21.59, and 27, we are looking at close to 29 lakh crores. It is not impossible because the growth rate that we have assumed, the average CAGR would be somewhere around 30-33%. And some of you have already grown even more than 32-33. But there are some who haven't grown that fast. The smaller companies, as I said, need to grow big. You have to have really aspirational targets. You just cannot grow in small percentage points. So what do you need from the regulator? You tell us. We are willing to give you whatever dispensation you require. And the larger companies, I think they have to grow even bigger. For all of this, you need to also muster capital. You don't need the capital perhaps today, but over a period of 5 years, you will have to plan. You have to go to your board and place your proposals. In the next slide. So, for different companies, we have indicated the target based on their growth potential and also the other parameters. We have the profile of each and every company, and based on the achievement of the target for achieving the insurance density goals, to commensurate with that, Aditya Birla Sun Life, for example, has to grow in this fashion. I hope Aditya Birla, yeah. And we have sent this to you by email yesterday. Next. Aegon Life has to grow in this fashion. Aegon Life hai? Yes, sir. Then next. AGR's Federal Life. This is what we have projected. I hope you have read it and you will track it. Next. This is not the bar. This is the minimum. And if you grow even more, then I'm going to honor you here. Next one, Aviva Life. Then next, Bajaj Allianz. Yes. Next, Bharti AXA, Canara HSBC, Edelweiss Tokyo, Exide, chalte chalo. Future Generali, HDFC Life, ICICI Prudential, India First Life, Kotak Mahindra Life, Max Life, PNB MetLife, Pramerica Life, Reliance Nippon, SBI Life, Shriram Life, Star Union Daiichi, Tata AI, and then of course the big one, LIC. So I'm sure all of you here together, sitting here together, will have to give us some kind of confidence and commitment to us that yes, we will strive to achieve these goals. And in this journey, we are not leaving you alone, we are with you. We are with you all the times. And a phone call away or a flight timing away. 1.5 hours from here to Bombay, we can come to Bombay, you can come to Delhi. So so I'm not going to the details now, but when we open the house for discussion on these targets or anything, you can definitely voice your opinion or suggestions. You can even tell me, no sir, how come you have kept the targets so low? I'm going to do even more than that. I'd like to hear such voices as well. So the next one is just trying to give a trend of the business trends and the kind of mix that you have currently. If you look at the group business analysis, then the total industry FY29 was 15 and 39 in 22. LIC, why LIC separately? Because that's the big one, so they are almost 60-70% of the market. So 69 is what they had done last year, it is 72 now. Private insurers 39, almost static. So the percentages indicate possible areas for growth, both for LIC as well as the private insurance. The call is to be taken by you all. We are not prescribing anything, but we are only trying to show this is the trend, so that you can think of what you want to do. Next one. The next one is about the single premium business analysis. Again, if you look at 39, 33 is the overall industry. LIC 54 to 45, private insurers are almost there, 24. I don't know why you are stuck there. So now if you look at the average Indian income has increased and it is definitely bound to grow even more. So whether this segment is actually being ceded to other competitive instruments, maybe mutual funds and others, is something you should be worried about. And also look at the business opportunities. We are only trying to point out that there is a business opportunity here. What you ought to do is that your call. Next one. Now, unit-linked business analysis. So here also, if you look at the industry 10 and now just grown to 29. LICs, here the skyscrapers are all demolished. It's not there. They have not built one yet. Private insurers are almost static at 29. But the whole idea is that there should be probably a balanced mix of linked and non-linked products. And particularly if you look at the millennial population, then maybe it is more capital efficient for insurers to target the millennial population. That perhaps could be a choice of the millennial population for more unit linked. And whether LIC in particular is looking at a choice into this segment. These are the thoughts we are leaving behind with you as far as the business pattern is concerned. Next one. This is the segment-wise business analysis. Look at the private insurers, LIC and industry with regard to annuity, pension and life. So private insurers, predominantly their presence is in the term, the mortality risk. Whereas LIC has a different mix. 38% is life, 40% is pension and 22% annuity. The industry, the private players are 51% into term and 31% pension and 19% is annuity. So probably a more balanced coverage would be desirable, again for you to all consider, but again annuity pensions have huge opportunities, whether you like to tap that as your business priority. This is something we want to leave this thought so that you are aware of how the market is progressing and what is the trend within the insurance industry, LIC vis-a-vis others. So I'm sure LIC also will try to stay ahead in the race to retain its market share. But as I said, the market is so huge, hardly tapped. So there is room for each and every one and more players. So my request to all the CEOs, will be to carefully calibrate all of this and prepare your business strategy to achieve the goal, which that is a definite one. We are prescribing that, in fact, that's the minimum you should achieve. But as far as the mix is concerned, it is for you to take call, but we have flagged the issue before. Next. For the JJBY, I'll come back again, being a very important flagship program with the premiums revised. I'm sure I've met individually a lot of the CEOs and I've received your communication also. You're all enthused and excited. But it's time to now just take off. So my request to all of you will be to quickly, within the next week, 10 days time, define your targets, goals, and by what time you will be able to achieve. We have already indicated the targets, and we would like you to come back on that so that we will be able to also monitor that closely. And if there is a need for an interaction with the bankers on one hand and the insurance companies, I will be most willing to do that. I will also request the Secretary DFS to join in because a large number of public sector banks are also there. We'll request the other bankers also to join in, and if that helps, please let us know so that we can quickly organize the meeting. So here we are generally trying to sensitize all of you that there are about different categories of banks. Have we tapped them all? Particularly those banks where there is a deposit account of the individual. I'm not talking about NBFCs where they do not have a deposit account. But if you go to the cooperative sector, a large number of banks where they have a bank account. We haven't tapped that. Small finance. How we can leverage the entire banking system to extend our coverage and grow even more than what the government is expecting us. So the target that the government has prescribed is 15 crore lives in 3 years. But we want to achieve this even before that. And it's not difficult because it is a very simple onboarding process. Next. So I think we are almost towards the end of the presentation. We also want 2-3 things to happen. Our engagement with the state governments have been very minimal. Now, as far as the banks are concerned, they have a forum called the SLBC, State Level Bankers Committee. They engage continuously where the state chief minister or the chief secretary chairs that meeting, all the bankers are there. Unfortunately, the insurance sector is not represented. So I'm going to take up, I've already started the dialogue discussion and formally take it up with both RBI as well as the Department of Financial Services, Ministry of Finance, that the insurance also should become part of the SLBC. So it should be known as the state level bankers and insurance company. I also mentioned in my first meeting that we should also hold meetings in the state level and at the state headquarters where we invite the state government senior officers and the political executive also to highlight the importance of insurance and how the insurance industry is also propelling fuel and growth of the economy of the state. That is by way of your AUM going towards the state development loans or the government securities. So that is something we need to highlight. I think the state governments will really realize that yes, there is a huge potential so that they will try to make their economy grow by getting more and more money, and more money can come only when more and more people get insured. So infra for that matter, infrastructure, everybody is looking at infrastructure, how more and more money will flow into that segment. So I think we need to capitalize that opportunity to get them also on board, and then we can push our targets also. They set up targets for their district magistrates, collectors and all. So then I think there will be a multiplier effect in our effort towards insurance penetration. So we are here trying to give an idea, because that is subject to change depending on the inputs that we receive, two or three states to each of the insurance companies, where one will be a lead and the other two will be the sub-lead. All others will also work, but like akin to what the banking system has, they have something called a lead bank concept. So where there is a significant presence of a particular bank or a company, we would like that particular company to be the lead, so that they convene and they coordinate between the other insurance companies to attain these targets. So here we have tried to indicate something. subject to change again or your inputs, but definitely we would like each one of you to adopt one or two states and union territories across the country. And we also would like to also depute an officer from IRDA as our representative in each of these SLBC or SLPIC or any other meeting that you would like to convene and for purposes of coordination, both with the regulatory setup, with you, with the state government. So this is how it has been designed here, but again, as I said, subject to your inputs and we can change also. So Aditya Birla, Maharashtra, Andhra, Econ Life, Kerala, Aegeas, Federal Life, Uttarakhand, Aveva Life, Bajaj Allianz, Tripura and Rajasthan, Bharti AXA, Odisha, Canara, HSBC, Karnataka and Delhi, otherwise Chandigarh, Exide, Meghalaya, Future Generali, Sikkim, HDFC Life, Gujarat, Dadra Nagar Haveli, Daman and Diu, Bihar, Manipur, ICICI Prudential, Madhya Pradesh, India First Life, Tamil Nadu, Puducherry, Kotak Mahindra, Uttar Pradesh, Arunachal Max Life, PNB MetLife, Himachal, J&K, Nagaland and Haryana, Pramerica, Reliance, Punjab and Ladakh, SBI Life, Chhattisgarh, Shriram Life, Telangana, Star Union, Jharkhand, Goa, Tata AIA, Mizoram and West Bengal, LIC, Assam, Andaman, Nicobar and Lakshadweep. So this is what has been tentatively arrived at, but I think we would like to get your feedback and inputs and accordingly we can revise. And it's not that you are just only focusing, but you are the lead there. And others will obviously chip in and then only we can be able to further our efforts for insurance penetration. Next one. I think we are at the end of the presentations. We would now like to open up for discussions, your views on the issues that we raised or any other thing that you feel pertinent and important. Thank you very much.
Thank you so much, sir. Kind of storm, Chairman sir whips up with a very deep, calming voice is something which is very admirable. Now, it is an open house for the interactions and opinions. May I now first call upon Mr. M.R. Kumar, Chairperson, LIC of India.
Good afternoon, everyone. At the outset, let me thank Chairman IIDA for organizing this meeting. I think it was an excellent presentation, sir. Covered a lot of points, and I think most of us are in agreement with whatever ideas we have the way forward. So to go specifically to these topics that you have highlighted for discussion. Yes, penetration is very low. Obviously, we have all been working for it for quite some time, very hard. But I think that the time has now come to really look at what we can do to ensure that we grow that. And the 2027 targets that we have given compared to the rest of the world and where India should be, I think is a doable thing. But that it will depend on what we do in the first 1 year, 1 or 2 years. A lot of work has to be done this year. And I like the way, sir, that you have talked about how the support that will be there to the regulatory side will be important. With that, I'm sure that we will be able to take this part of it forward in a very big way. So business targets are very tough for LIC. I'm not saying that all those skyscrapers except one. But then since we have all those skyscrapers, it becomes quite difficult to move the skyscraper another few notches. So once you reach that kind of level, it's difficult. But it's going to be very, very, shall I say, competitive, not only competitive, but quite difficult, but we will strive for it. We have now been listed. We have a lot of plans to grow the business in all the segments. If you notice on the annuity, pension, and other things, we are almost evenly placed. But we'll have to grow the business, all the segments. Every line of business will be important. But so we take it that this business target that you've given us is something we'll have to strive for. 30% is a little steep for LIC, but we are working on it. We will work on it. In fact, we planned about 25% for the year. But I think we'll go back and the drawing board and see what we can do to make that larger in terms of the expectations that you have and all of you. Our capital, we have no issue as of now. I don't think most of the companies have an issue. But then going forward, we'll be watching that space very carefully. And whenever required, we will take care of it. So all states, I'm open to any state, anything that you would like to give. We are, in fact, behind the curve in Assam. I think we must have done a lot of data. I know that. We are behind. We've lost market share more in Assam than anywhere else. So possibly that is why this has been good. But it's good we take it. I think that's good for us. And we would like to be lead in others as well. If an opportunity. Thank you.
Would request the dignitaries to come and pay the dice. And next, I would like to call upon Mahesh K. Sharma, CEO of the Insurance Team.
Thank you. Yeah, good afternoon, and first of all, I'd like to thank Chairman sir for giving a very comprehensive picture of industry and the way ahead, and all the initiatives taken by IRDA, which is very welcome. And as far as business growth is concerned, I would only like to say that like Mr. Kumar mentioned, we were aiming for something like 20 to 25% growth for the year, and we will definitely try to look at this. Of course, the targets, I mean, we would love to achieve these targets, but then we'll have to look at what is available to us right now and how we can take it forward. So we will be working on that, and our own aim is to at least try to grow as fast as possible. There we are in one mind with what Chairman has. Capital, we don't have any concerns right now, and we are very confident that we will take it forward. And on top of that, if we are going to go for a risk-based capital system, then I am sure that we will be even better placed. That is something which we will welcome. And even if it comes in 2 years, I think that's a good enough time frame for us. PMJJBY we are already working on, and penetration also we are working pretty much on that. PMJJBY, I would like to thank all of you, actually all the other members for, and of course Chairman himself, for the wonderful work in getting the premiums made more realistic. I wouldn't say that we are going to be running into profits or something, but then it makes it very, very close to breaking even on this. So that is exactly what we expect. We don't want to make any windfall profits on insurance distribution to the lowest strata of society. I'm sure this will help us in pushing penetration more. We are working closely with SBI and all the other banks that we have, the RRBs and one or two other banks that we have, and we try to push the penetration in PMJJBY. I think it is a very good way of actually trying to make the experience better, because the more people you cover, the experience becomes better. Right now there is some kind of adverse selection. I think that will go away if everybody is covered. That is a very good way of doing it. Some of the other initiatives I really appreciate. One of the things I would say is that the regulatory sandbox. I'm sure if the guidelines are relaxed and we can have an ongoing process like Chairman has mentioned, I'm sure we will come up with more creative inputs. Right now, what is happening is that with all the rules and regulations that we have to keep in mind before even thinking about a new idea, I think there is some restriction. So I think if we can open up our minds and think of creative solutions without the restricting influence of existing regulation, and then we try to fit in what changes we would require, or what concessions the sandbox should be allowing us. I'm sure we will come up with very many innovative ideas out there also. And we ourselves think that the hackathon, apart from what India is proposing to hold, I think our company also, we will try to have this kind of a thing, working with younger people, institutions, and also smaller companies, which can then work on specific problems that we may look at, and then come up with solutions, which we can then buy or participate in some creative manner. So these are some of the things that I would like to place out here. Going forward, I'm sure we'll participate more in this. Thank you so much.
Thank you so much, sir. May I now request from HDFC Life Insurance, Suresh Patani and Saran.
Good afternoon, and Mr. Chairman and IRDA, thank you very much for the presentation. I think it was very, very detailed and comprehensive, and a great follow-up for the April presentation which had been made. On broadly the points that got covered today and some of the areas, I think it's a well laid out working committee structure in terms of increasing penetration across. So a lot, we've gone through each of the detailed representations which each of the working committees has made, and we find value in many of those. And a lot of it has got covered in relevance in each of these slides that you presented today. We do believe that the insurance penetration is low, and as a listed organization, we have the mandate to increase the penetration in our country, and we are looking at it very, very actively. I think on some points in terms of business target, we'll be happy to look at this. I think we have been growing kind of CAGR on a consistent basis, but a lot of the measures that are being put in place will probably help us grow faster. I think these are aspirational targets, but we'll be happy to participate in the growth that you have laid out. In terms of capital, I think look, the risk-based capital is clearly welcome, but in the interim and the short run, if there can be some kind of solvency-based relaxations, whether it's in terms of ULIP or whether it's in terms of short-term products, I think that will help the industry to grow and release some capital. In terms of penetration, again, I think there is a view on open architecture. Clearly, there will be two sides in terms of how you can open up, but there are pros and cons of this, and we would request if the regulator can look at it in a very balanced manner in terms of how public sector and some of the banks which have not yet opened up, open up further in terms of at least 3 players being present across all the banks. Also, in terms of the EOM and the commission relaxations, I think it is a point to be considered. Our request would be if we can look at a matrix-based regulation where there's an AUM-based EOM and commission. I think it is fair that we have certain guidelines in place which kind of bring a lot of merit in terms of what quality of business is happening in the market. On most of the other initiatives, what you have mentioned, I think as an organization, we are very clearly focused on quality, profitability, as well as growth in terms of numbers. And you can be rest assured whether it's the state-based focus or whether it's in certain segments, we'll be more than happy to participate in the kind of revenues that you're looking at. So broadly, and of course, a lot of the other asks from our end in terms of VAS, health, indemnity have already been covered, and we look forward to many of these features. Thanks.
Thank you. I now request Mr. Prashant Tripathi.
Thank you, Chairman, sir. Let me just begin on a lighter note. On a lighter note, I woke up in the morning and saw the email, and to be honest, after reading the 50th number, मैंने अपना चश्मा उठाया एक बार फिर से पढ़ा उसको. I'm sure my colleagues here relate to it. And since then, in the flight coming here, I've been just thinking as to how we could achieve. So thank you very much for igniting the thought and pushing the industry to the possibilities that will exist. Genuinely, these numbers are large, but they are achievable. Being in the industry, the fastest growth in penetration that we saw was from the year 2003 to 2008-9. And the big vehicle for that penetration growth was ULIP. We did a very good job, but along with that, there were many things that we had to fix. But I remember going up from a sub 2 number to about 4.2. That's the number that we achieved. So going up from 3.2 to 6.15 for the next 5 years is definitely hugely aspirational. And all the things that you called out would be on the possible vehicles to achieve, which is single premium, annuity, ULIP, are the ways that we could get there. Really going there just on the back of savings, repeatable, etc. will be hard. Now, hence, when I start to think about what we need to do, I think for most of the companies, about 2/3 or more comes out of renewal. The premium comes out of renewal. Now, renewal growth in future is going to depend on how much we have grown in the last 5 years, which is not really 40%. So growing renewal at 40% is much harder. And hence, the degrees of freedom to growth will be only on new sales. However, we need to sit together and explore ideas on how we could drive renewals. There are a few things that come in our way right now. For example, highest amount of lapsations do happen or surrenders do happen on ULIP business. What do we do to make sure that the person continues? There are a few things that in all wisdom we did in the last few years, they may be relooked at. Or for example, other than par business, we don't give loans. So really, there has to be a crack in looking at all the options available on maxing out renewal. As you know, you members have called that our persistency is not good. I think we need to spend time more thinking about that. The other one is ULIP business. Now, there are changes that happened in the ULIP business, and honestly, we need to spend time together to understand how do we solve for ULIP business, because that could be a potential very strong vehicle for growth. But when we start to try to titrate that with respect to distribution incentive, how do we take out in the market, etc., there are struggles that people come up with. And for example, if you were to track how ULIP business grew first 9 years, and since then, you will see a delta. And I know that if we were to come together and try to solve, we will be able to find that. Likewise, for example, protection, another vehicle that we should be using. So I think what we need to do together is on all the areas that you called out, we need to have some extra focus on solving for them, because that will be the way we will be able to achieve the kind of numbers which have been given. I will also sincerely request, sir, that while we are talking about premium growth, which all of us like, I think there are other measures where we are even more pathetic. For example, sum assured per capita, sum assured as a percentage of GDP. We are really at the bottom, and there's a lot more work that we need to do. So having a few parallel measures in terms of really defining what matters to the customer, for example, sum assured matters quite a lot, will also be some secondary measures that I request we consider, so that the industry 5 years down the line makes comprehensive progress. In this spirit, just taking one more minute, out of COVID experience, I think big realization that all of us have is while we did a good job in terms of selling savings, we didn't do a good job in terms of selling sum assured. And most of the claims when people got may not be good enough to take care of their families. So we need to keep that in our focus. But thank you very much, sir. Absolutely delighted, and we'll be very excited to work on all the elements.
Thank you, sir. Next in ICC provincial Mr. Sachin Raghunath.
Thank you so much, sir. What I found most exciting in your talk was it almost felt like going back to 2000. When we started business, the approach was all about outside in and opportunity. Somewhere along the way, I think as an industry, we settled into a different mode which became more inside out, which was like we have now defined our boundaries. And that is now determining how we progress going forward. In a way, listening to you today was a bit of a restart in my mind. And I would be very, very excited to go back to the outside in approach and let the opportunity define the way we progress, as opposed to our current set of constraints determining how we progress into the future. I would endorse what Prashant spoke about in terms of other measures as well. Sum insured is indeed a very, very important measure of the social security that we are providing to our consumers. If we can indeed work on that as an additional measure as well to monitor ourselves, I think it will drive us in the right direction. Another thing which appealed to me a lot was also about the comment that you made that are we losing out to some other providers or some other industries in this entire growth and opportunity journey? And I guess that is something which is very, very relevant. While insurance in the context of household financial savings, the first decade after liberalization moved quite rapidly, I think it's been quite stable, or to use a slightly adverse comment, stagnant over the past decades. And if indeed we now have to take back our pride of place in the relative context of other financial savings products, we will have to review the proposition, the delivery, and the end-to-end value that we are delivering to the customer on those products. I think this is something which we may not have thought about adequately yet in the recent context, but something that we should particularly focus on as we go into the future. Otherwise, sir, the objectives that you want to set for us in the context of taking up states or even in terms of growth resonate very soundly with us. We would be very keen to pursue that path. I can, on a spreadsheet, give you 10 reasons why those growth rates cannot be achieved. But I think we have to break out of that and say that take this outside in view to say this is the opportunity. What do I need to do to get it? So thank you so much, sir. Restart from you.
Thank you so much, sir. May I now request Mr. Bima, CEO.
Hello, sir. It is a sign of times. We get an email from IRDA at 16 minutes past midnight, which lays out the targets. And that too, I don't know if it was a coincidence or it was planned. The email ID was n.chandra, which in the Tata group, demands an immediate response. And having opened the email and seen 40% growth, I was thinking that there is a direct line between IRDA and our board, because roughly we have similar targets set by the board, 37% versus 40%. With one difference, one very important difference, Chairman. We managed to convince the board that these are aspirational targets, whereas you just said these are minimum targets. Now, having said all this, I think in all honesty, I think it's great to see the momentum. There's a lot of deliberation which has already happened as part of the 8 working groups. So I will not repeat a lot of that because it will come your way, it has come your way. You will look at it. Just a few quick points I wanted to make. First one is capital. I think if we have to grow at 40% and we are committed to that, we need capital. Great to hear that there will be some relaxations in the ease of raising capital. We would request a relook at sub-debt limits in particular. We would also request examining financial reinsurance as a mechanism of releasing the trapped liabilities until the RBC regime comes. When the RBC regime comes, we will be in a different world because that is maybe 2-3 years away. I think in between, if we can look at financial reinsurance very specifically, it will be very helpful. That's request number one. Second, sir, is on your point of penetration. PMJJBY is a great vehicle. We would request that the authority can consider having CSC, which is already working with a lot of BCs and BLEs, is also a vehicle in addition to banks to delivering PMJJBY. There are 4 lakh BLEs. They are already working with banks and are used to financial transactions. They are distributing insurance. If PMJJBY can be added onto that chassis, it will be fantastic. And I understand out of 4 lakhs, 35,000 are women entrepreneurs. So they could be a kernel of your Bima Wahaks also, that you are kind of talking about as a starting point. Third thing I would say is repeat a request that banks are already well penetrated and we should move to full open architecture in banks without limits, not mandatory. Some bank wants to work with 1, that's fine. Some bank wants to work with 5, that's fine. It's just like it is in all other Asian markets, all European markets. Mutual fund in India is like that. That would be our third request. And fourth, which we think can help with penetration a lot, is today the group platform on non-employer employee is very restricted. So we can't manufacture savings products on a group platform. If that restriction is removed, again we can see a lot of innovation, given all kinds of groups that life insurers will be able to create, and then go out and market savings or protection related products. 2 points which maybe the industry needs to work on, if I just reflect on what you are doing. You covered, sir, which is we need to be much more systematic about our own awareness training and coordinate with you. I think we can take a lesson from the mutual fund industry on that. Second one, I would point out, maybe a little far out. What you are doing is wonderful. You are kind of going to principles-based regulation, which will increase the onus on the industry. We should think about an SRO, a competent, strong SRO mechanism. Maybe a little bit like what FINRA has in the US for capital markets. To my knowledge, one of the most benchmark SROs. And maybe it's a little far out, maybe we'll build up to it because FINRA is a very professional organization with 3,000 plus people. But I think it's worth thinking about as we partner on this journey with you. But net, very exciting times ahead, and we are committed to working with you to make all this happen. Thank you.
Thank you, sir. May I now request Ms. Anil P. from Bajaj.
Good afternoon, members, sir. Members. Thank you for this opportunity and thank you for all the initiatives. It is motivating. It kind of redefines what we were planning to do and what we want to do. In terms of the targets, I'm sure this is a term which you'll be hearing from all of us. It's highly aspirational, but what is being proposed in terms of the various initiatives and the committee's recommendations, I think with this is definitely achievable. In terms of our capital, we feel that currently we are very comfortable. Our solvency is about 500% plus, but with these growth rates, I think we'll have to revisit that belief. In terms of states, we already have something like each Manpower member is assigned a state, but this takes it to a different level altogether. We are greatly enthused by this and definitely look forward to working with the states assigned to us because, our belief that a lot of these growth can happen in tier 1, I think that has changed quite a bit due to COVID, but this will further strengthen that and definitely help us in achieving our goals. So we had the privilege of participating in the distribution committee and we look forward to how the final recommendations come out, not just for this committee, but for the other committees also. Some of our asks are linked to these outcomes. For example, in terms of open architecture is being debated, being discussed, and our only ask there is that this is again contingent on how the UM comes out, that there is a level playing field in terms of for all players, and that market conduct, is continuous, so that allowances maybe a sub-limit of how much spend can be done on acquisition, all of that we look at. In terms of the growth for annuity and pensions, we had an ask again linked to EM. Currently, we had a product. Annuity was a single premium mostly. We had a regular premium annuity. We saw a great uptake. What we thought would be a low single percentage of the products that we sell went more than 10%. But we had to forcibly reduce it because of the allowance available to us. Therefore, while there was a demand, we could not cater to it. Hopefully, with the new recommendations coming in, this should be taken care of and enabling us and also the regulators' aspirations of growing the annuity business. And with that, I would like to answer.
Next, may I request from Kotak Mahindra Life Insurance,
Very good afternoon to all the members and the chairman. I think we're all in the startup mode. I've been in many startups in my life, and in the startup life, we say what is 1 year. Kind of sweeping changes we have seen in the IRDA in the last 3 months makes us feel almost just like in a year full of reforms. Thank you very much, sir, for the huge changes which have been coming along, and all of them have been debated for a long time. To see this happen in such quick time, I think we really admire the way IIT has been going about this. On specific points, I think as far as capital requirements go, we are going to put on live is very comfortable as peoples. On listing, I think our shareholders probably take the right call at the right time. Having said that, what we are really in favor of is disclosures. I think we are very happy to have disclosures, common disclosure that we are listed on, because ultimately that's what is important in terms of disclosure, because there is a lot of responsibility for listed companies in terms of enhanced disclosures. We are going to the right and happy to comply with all the disclosures which a listed company would be for, even for us. In terms of the targets which have been set, yeah, they have been very ambitious targets, and we also have been having our 5-year deliberations. So I think this is obviously much bigger than what we had envisaged. Having said that, I think the opportunity is there. We should probably ensure that we encash the opportunity. On the renewal side, which Prashant spoke about, I think I've been a banker, sir. I think one difference I see between the banking industry and the insurance industry is our levels of engagement with our customers really low. We sell a product, after that we probably be there to secure the claim, or we are in touch with them to pay the premium. And if I look at even the 50-year persistency, as an outsider, I really feel that if you say 60 or 55 or whatever the number is, really a very low number. The only way I think this can be probably enhanced is if you're able to build serious customer engagement. That's why value-added services comes in. Because I have more than one reason to speak to my customers throughout the lifetime of the policy rather than keeping it once a year or so. Or if it's a pure term, it's not even once a year. It's probably when the lifetime of the customer ends. So I think that's where that's going to probably make a huge difference in terms of our renewals, in terms of persistency. We can do a lot of cross-sell and upsell, which is also one of the best ways of increasing the penetration and going forward. As far as the opening up of the bank architecture is concerned, insurance companies, we all have various views. We strongly request the regulator probably to have a chat with the banks. Having a banker, I can probably argue on both sides. What's good from a bank perspective, what's good from a customer and from a regulator perspective. I think I have to chat with all the banks, asking them why they are where they are today, whether they have open architecture, whether they are single. It will probably help us get a well-rounded perspective before we move forward. One more thing we are very excited about is dependability, either as a distributor or a manufacturer. That again goes back to giving wholesome solutions to customers, because protection is one category. Across both health, accident, and term, I think it's one category. The ability to offer bundle solutions probably enhance the ability to sell better. Last point I would like to add is, I think from the insurance perspective, we need to probably look at ESG. What can we do the ESG platform? Because we have large amounts of funds that we are deploying. The AUM of the industry is large. I think that can also bring some more prominence to the industry and help us attract investments, because very global investors are looking at ESG. It's very important. So these are the thoughts I have to say. But amazing to be here and interacting with all of you. I think the winds of change are really sweeping, and hope all of us make it the wind be the wings to soar. Thank you so much.
Sir, another request. That's the questions.
So thank you, Chairman, sir. Thank you to all the members. And filling in for us here, Mr. Rao, exigency couldn't come. So thank you, sir. It's been really walk the talk. Last 2 months, we've seen a spate of quick reforms, using by some of the findings which are here. And really happy, energized with the way we are approaching it. It's a positive disruption. Exciting times ahead for us. I think some personal takeaways were the InsurTech reforms, the sandbox. I think we also spoke of not just comparing the marginal but also differentiated approach of millennials, MSMEs, and that's some good food for thought. I know the targets are aspirations, sir, but I think it's a mindset shift we need to do as an industry. So I'll go back, we will do our discussions, but we are fully in sync with your vision around it. You spoke about adopting a state. On a lighter note, Maharashtra has been given to us, and with the political developments over the last 1 or 2 days, it's exciting times for us. So we are really looking forward to get into it fully, sink our teeth in. Personally, I'm excited about the risk-based supervision and also the focus on customers you spoke of in terms of appointing internal ombudsman, looking at the complaints. So these are some good things I'm taking ahead. So we were privileged to be part of the group on bringing in investments in the sector, and it was a good opportunity to hear the views of all and also to contribute to the other groups. We are happy with the guidelines you're giving, and it's like a well-oiled machinery now, really working at the speed. I think one of the most important things is open architecture. Everyone has spoken about it, but I think the level playing field is very important. So that's something and thank you for this opportunity. And
I know request Mr. Ashish Bima, CEO of Organised.
Good afternoon, sir, and members. Chairman, sir, thank you so much for that inspiring speech, and it's remarkable to see the consistency with which you deliver. We were due in April, and then I was fortunate to be due the InsurTech conference, and then today. So I think we are hitting upon absolutely the right elements that's going to be able to drive the insurance penetration agenda forward. It was also wonderful to hear your views on how technology can be leveraged, and I completely endorse what you were saying as to what opportunity there exists, particularly in India with the development of technology. So the task really is quite cut out for us to say, how can we come together to deliver manufacturing models that makes economic sense to various stakeholders? So really that's, I think, the agenda on the table more for us to take away to say, how can we deliver something? Like some of my colleagues said, to the email as well, and it's wonderful to see midnight oil being burnt in the regulator's office, but that was not the only job. I got to see why is the Tata Group writing to us? So that was the first one that one prompted to open the mail quickly, and then we ended up seeing some very inspiring numbers. And I got into a good call with some of my colleagues back home saying, well, here's an ask. Here's an aspirational ask. All of us understand what an aspirational ask is. We play some of those down the line as well. But there is opportunity. There is reality the way we see how can a 3.2 become a 6.8. So there is meaning. There is reason to say that there is an opportunity. And back to what I was saying, the task is therefore cut out for us to say, how can we marry an opportunity to build execution plans, whether by leveraging more product categories, whether by leveraging more customer needs, to be able to deliver to some of that. So I wouldn't say we have an action plan cut out for this, but I think the first step of creating an action point is to be able to trigger a thought, to be able to say it is possible to do. So it is the belief that then leads to be able to create something out of it. My other point, sir, is I think I agree completely with the women point that you made. I think we are one of the companies that actually runs a women-only channel. It really comes out of the belief of our shareholders. And we run a women-exclusive channel that runs over 200 branches with only women employees. And over these years, we've seen the benefit of some of this, the social inclusion side of it, the ability to influence, the ability to relate in a particular manner. It comes with its challenges. I wouldn't say it is a completely solved model. But there are a large number of benefits that we see that we are working on how do we resolve some of the other elements to be able to grow some of that faster. But what you said is that should it only be an employee model? What we run is an employee model. Or are there variations that can be experimented with to leverage this opportunity better? Some endorse some of that thinking and some of the way Middle India is structured. Middle India is actually structured in a particular manner that supports the emphasis that we were giving. Our company has the ability to leverage our network. We have 713 points of presence, and therefore some of the stuff around penetration that you're saying will need physical infrastructure. So the buzz that we use in the company now is to say digital is not enough. It's not enough to be able to do this digitally, and that digitally there is a physical side, especially in the regular premium kind of policy. And therefore, what we started thinking this morning to say, with all the stuff that we're saying, how can we leverage the network to be able to deliver the promise that we want the country to be given. No capital issues with us. We are well provided at this point in time. So at least for the foreseeable future, there is no capital requirement. But then if we have to answer to some of those kind of numbers, we have to look for getting additional numbers. You mentioned appropriately around how we are trying to push some of the governmental agendas. So some of the reforms around taxation, etc. So more renewable premium has to come in. It will have to have some more tailwind. So if we are able to create taxation brackets like some of our neighboring countries are able to do, where life insurance has a separate income tax, some of that provides a very significant tailwind that is going to be able to get the industry to garner more renewal premiums. Otherwise, there is a natural cliff at which the insurance industry is on. Let me stop with this. Thank you so much for that very inspiring address, and we look forward to working with you on this agenda.
Thank you, sir. Now, one, we have CEOs. So, it's also
Good afternoon, Chairman sir. As you can see, we like a case which things are moving absolutely exciting for us. The board members will not, with the kind of numbers that we're talking about. But as you have heard, the special targets, we will absolutely with my team. There will be some enablers required. Some of them, or most of them, have been covered in the 8 committees that we have formed. So I'm sure progress from there. Today, I would like to maybe say that we have some expertise. Globally, MetLife has implemented IFRS in some of the countries already. We are very happy to work with the authority committee to take it forward. On internal ombudsman, we've already implemented it in the company, and again, we're very happy to share some very good results. Very excited about the InsurTech space. We already work with some. We will be very happy to participate further. In the now the structure of the coaching economy, which we call it a pitch day, where some InsurTech companies pitch to a group of people. Again, very happy to share whatever experiences we have, but also learn from this bigger forum that we will not think. Apart from that, I think one ask again will be there. EI limits, they do come with a few other caveats, such as citizenship of key personnel or the number of IDs required when the EI was 49% and above. That's something that we have represented already. Thank you for the presentation. Way forward, we surely want to participate.
Yes, sir. On Sanjay Tiwari, CEO of Star Union Bank.
So thank you so much. I think PMGOI price revision would not have happened, and we are like third largest on that side. And it's like we have more than 1 crore customers only on PMGI portfolio. So we're just thinking that maybe premium wise it may be small, but we have reached out to more than 1 crore people for us. I think it's a 50% growth, but we'll perhaps outdo that. But the number of lives, I'm just thinking that maybe we are quite big on that, but that also should not that be pushed as an objective as well. Because, it's like a 15 crore lives we have set up on the PMGI front for this year. I felt that maybe this will again be, in the next 3 or 4 years, perhaps it can become 25 crores. So, and I think that will be the real deep penetration. Well, the sum assured is only 2 lakhs, but I think it's a very, very good start. On so many other initiatives, I felt that Bima can become one of the game changers in the coming years. Tech-led initiatives, I think, worldwide many people are trying, but somewhere the best optimum solution is not coming out. It's like not becoming too apparent that this is the way forward and let us go and run with this approach. But I think with using all our the tech stacks available, like the data available, like Aadhaar or the PAN or some other, this kind of maybe a health stack coming in the future, so they can become real big enablers on the tech platforms. We are also trying a lot of things on as a pilot, but Bima can be a very, very good, and perhaps that can be enabled and added, a tech element can be added to that, it can become a real game changer. So the other things which you said, like on pension and annuity, I feel like there can be again a huge number or a huge business segment for the industry. So then the annuities becoming fully taxable is perhaps a problem which is not allowing this whole segment to grow. We can perhaps push that and see that if, at least for a limit, if that can be tax free. Only for a small amount maybe, but then everybody tries to at least get, and it becomes a known product. So that perhaps will be an opening point for many of us to start looking at it also very seriously. NPS has been growing a lot, and perhaps the returns or the low cost as well. Then also we can have a target like that. We can keep the cost low, but make it tax friendly and a little more tax friendly, which we can work with NPS together to make it a small amount tax free. On some of these IFRS and RBCs, I felt that if they can come together, it will be a good thing to have. Because the system changes and all which we need to do, if it is all together, because in one of these, the reserve requirements also, then the capital requirements. So in tandem, when they are worked out, I think they always work better. So it may take 2 years, but you can set up a timeline, maybe 2 or 3 years also in advance, but start working towards it, it will really help. On the capital front, some of the short-term things are, I feel that like superannuation helps in the pension and annuity side. But superannuation, the capital requirement is 3 times of gratuity. They are very similar product, but it can be easily reduced to 1/3. Actually, I felt the requirement on superannuation can become 1/3 right now, whatever is there. That can really help expand the market. Also, on the short-term borrowings, we have been discussing that we try to hedge our portfolio on the ALM side. What we do is we are trying to go to the forward rate agreements, for which we have to approach the banks. Some of the banks are helping us, some of the banks are saying that we are ourselves not participating in this market, so we can't help. But if short-term borrowings is allowed, then we can borrow in the short-term market and invest in the long term and hedge the future premium which are going to come to us. So, for example, we are selling a policy for 10 or 15 years premium, and maybe the policy term is 50 years. So we can, the next 10 or 15 years, we are worried that the interest rates fall, and we are giving guarantees for 30 years. Then how do we lock them at a guaranteed rate? So if we can borrow today at a short term, say in the short term market, then we know that for the next 5 or 7 years, we have locked ourselves at the rate. We borrow, with that borrowed money, we invest in a 30-year GSEC or a 35-year GSEC, and we'll be hedged completely. So it can really help us if the short-term borrowing market is open. I think so this financial insurance has already been discussed, so I will not talk about that. I think so that's all from our side. From my side, I on the this ecosystem whereby we make it open, all the bank insurance partnerships. There is a lot of thought perhaps needs to go, because the banks are they are also promoters. Regarding our own business interest, also is an important thing. When the banks, applied for license and they wanted to enter this business, they were always of the view that they will be, relying on their existing infrastructure to reach out and to sell. It's like, Bali coming and challenging me for a fight, saying that, you share half of your strength with me and then let us fight. So I don't know, sometimes, it's like we always thought that bank promoter companies were looking at that as the main segment. So they were not looking at other segments, but other companies which had started the non-bank promoter, they were looking at the agency, maybe, digital or other channels. But now everybody perhaps feels that bank is the best vehicle, then are we only looking at bank assurance as the only segment to grow? With that, sir, I'd like to stop. Thank you so much.
Good afternoon, Chairman sir. Good afternoon, members, and thanks for giving this opportunity. Chairman sir, this EA by repricing has become a very efficient tool for getting into penetration. So thanks a lot for that. Big relief. And we actively participate in this bank, so quite relieved with that. And I think we can take it further. In fact, Mr. Chairman and ECR will also push penetration. So I think that's a very good development. In fact, we've already reached 5% penetration as I'm talking. Chairman sir, Mumbai had made a request that group savings can be a very effective platform to increase penetration. Because protection alone may not be sufficient. People are now looking at insurance for savings also. So if we can realize that, it used to be there till about 2013, but then regulation came and said that you can't offer savings on group platform. I think it will be much easier for us to sell because retail policies, they have their own process of issuing. So if we are really wanting to increase the penetration, I would request that if we can liberalize this a little bit. And nothing wrong actually. You can link it with government of India security, interest rate area benchmark or whatever. That it's transparent to the customer. So that's something which will help in terms of penetration. But otherwise, what we should is that we are fully committed to increase penetration. Chairman sir, business targets, while in fact I really endorse your approach, that's really good. I think what measure we have taken is gross written premium. Gross written premium actually includes your superannuation gratuity business also, and there are various things. If we really want to grow penetration, as you also mentioned, I think we should focus on the retail new policies to customers which we are acquiring. So we are already looking at growth of about 30% CAGR for the next 5 years. But maybe if we can do it on the new BI, that would be a because then people will kind of try to give it. On capital, Chairman, so we are fairly capitalized, solvency of almost 800%. And somebody said that while listing can take its own time, but at least the disclosures, we can do that. That will get a lot of faith and trust in the industry. Because right now, the disclosures are very limited. I think not only why we are not listed, but supposed to declare our EV, our VAP, so that people are aware of that what's going on. So I think that can be a precursor before we ask confidence in the industry. On state options, so we are with you. Definitely will work on that. And because our development actually they have this facility and I have also attended with them. So I think it will provide the right platform to get deeper into the stage. Chair, it's very operational matter, and I don't know whether I should raise it here or not. But since you talked about ease of doing business, as of now, I think the CEOs are asked to certify, usually sign each and every small paper which is getting submitted. So we take complete ownership of whatever is going to be part, even if it is being signed by CEO or what actually. But it is becoming really a problem. And in fact, 10 days back, my father got operated surgery. I was sitting outside the operation theater, approving something very related. So it's just a humble request. It's a very operational matter. On open architecture, sir, I think the party is already enabled. Thanks. They are gone for it. The bank boards are authorized, only empowered to decide. So I would suggest that maybe we leave it at that stage. And even if you look at the global framework, regulators have allowed it. Mandatory, they are not forced on. Banks can decide based on their capability, based on their lastly, sir, again, it's very operational matter, but I think it is important. We are seeing markets being very volatile. Now, there is a small rule in regulatory guidelines which says that the fund bank of the customer goes below 1 year premium, then the policy gets auto terminated. Customer doesn't even have a choice of saying that it is foreclosed. And we saw this in March 20 when markets crashed and we saw some. This happened to customers and customers came back. Like in this COVID environment, just because market fell one particular day and my fund value went below 1 year premium, you have kind of terminated my policy. So again, it's now more of a operational, but since we are talking about protection, we are still in pattern. Maybe some of these smaller things also can be looked at. Lastly, sir, on corporate VC, like now that's something, again, I'm looking into penetration. I think banking is very effectively. So maybe insurance also, if you can enable some of those things, because currently we cannot get into corporate VC. We license corporate VC, and then corporate VC can have cost agents or whatever. It will help in penetration agenda. So these are the few points I thought I'll just mention. So thank you very much for giving this.
Yes, sir. Before we break for that, I think Jack is already feeling hungry. So he has made this announcement. But let me also inform all of you that our esteemed colleague Jan, the CGM of Life, is superannuating today. And after a very illustrious career, and we thank God for the sector, for the growth of the sector, the authority. So let's all give him a big hand for it. We break for lunch. Lunch is served outside. We have a typical Andhra Telangana cuisine later on. So I hope you'll enjoy the lunch. And yes, it's just outside this. So let's join for lunch. Thank you.
Friends, we are back to the agenda as we discussed in the beginning. Reinsurance is a very critical link in extending the coverage to every eligible Indian. Life insurers did face certain issues with reinsurance, and it has been exacerbated with pandemic also. In order to facilitate a kind of mutual interaction as well as understanding, Chairman Sir has arranged this kind of interaction now. We take this opportunity. I would request Mr. Naveen Tahiliani, CEO of Tata AIA Life Insurance, represent the life insurers and discuss about reinsurance issues they face.
Thank you, sir. Good afternoon, everyone. Pleasure to be here and to talk about this. At the outset, for my reinsurance colleagues, I can see 2 or 3 very powerful people here in the room. Hadi, Srinivasa, Jyoti. I hope you still talk to me and take my calls after this presentation. Let me caveat it further that this is industry view. And disclaimer, no, not disclaimer, disclaimer, but also reality. And for that, I do really want to thank, all the CEO colleagues and their teams who are here. I got the information from IRDA only on Friday that I'm supposed to do this. But incredible. I think it's also a great sign of how the industry is working together that we got so much input from all of you, and hopefully I can do justice to reflecting all that here. And if there is something that I go wrong in reflecting, please, my request to my colleagues is please jump in and feel free to correct me. So I'll start with the next page. If you go there to the next page, please. I think Prashant mentioned this today in his address, that we can look at what is happening in the industry on multiple different ways. But one measure we should definitely look at is sum assured. We can look at premium, we can look at growth in premium, new business premium, total premium. But at the end of the day, one core objective of the industry is coverage, sum assured. And if I draw your attention to the graph on the right hand side, I think that merits a serious relook in terms of what we are doing as an industry or what the opportunity is for us as we move forward. And if you look at sum assured to GDP, GDP is a measure of income in some ways, sum assured is a measure of coverage of future income. We are at a very low level compared to any economy, as you can see over here. And I think in that context, the discussion that we are going to have becomes even more important, because our humble submission as life insurance industry to reinsurers is we cannot move this needle too much on our own without your active support and facilitation. That's kind of the main starting point of where we are coming from over here. Now, before I move on from this page, it's also important to say that, as Mr. Jain Kumar mentioned, a lot of the challenges have come up on the back of a once-in-a-100-year event, on the back of COVID. If I rewind back to pre-2020, March 2020, and if IRDA had requested me to make a presentation like this, the presentation probably would have been blank, not much to share. So it is also with that context and this understanding that whatever I'm going to share is an outcome of a 1-in-a-100-year event, hopefully temporary, and hopefully between the life insurers and the reinsurers, we can find a way to get back to status quo ante as quickly and as fast as possible. So if I go to the next page, please. I want to use this graph to illustrate what the challenge is. And if you look at the blue line is an approximation. We talked to a very large number of life insurers to say what pricing were they enjoying from the reinsurers for what we would call the best quality book, medically underwritten book, because there are different rates for non-medical, telemedical. So medically underwritten book, what is the pricing that they are enjoying on the term book, individual term book. And if you see the blue line, what has happened is that after being steady at about 125, the index is 2017, index 200, it has jumped to upwards of 200 in the last 12 months or so, last 12, 15 months. And that's a very steep increase. When you think about, the portfolio that we are reinsuring, to go from an index pricing of about 110, 115 to about 240 plus, 2.5x. And I can certainly validate this from our company perspective, that this is true, and this is what we heard from a lot of our colleagues as well. This kind of a price shock to the industry is one challenge that we have to really grapple with. And again, as I said, this is happening on the back of COVID or other relook that reinsurers are doing as to what is the long-term mortality in the country, where should this price settle, etc. Those are all intellectual debates that should carry on. But that this change has happened is a reality. And that this change affects our term pricing and therefore our ability to write protection is also a reality. And therefore, if you see at the bottom, and you kind of correlate this to the chart that I showed earlier, that when you look at sum assured to new business premium multiple in India, it hasn't moved much over the last few quarters. There have been a couple of spikes. Spikes have been driven by COVID, when people have become more aware of term and have started to demand and consume that product. But public memory is very short-lived. The minute COVID goes away, masks go away, and the demand for term also goes away. So that's what the graph at the bottom is kind of reflecting. But the graph at the top is our real collective challenge that we need to work on. On top, what has happened because of the COVID issue is that there has been a significant constraint on capacity that is available in the market, and this has 2-3 different manifestations that I will talk about. But let me just, for this chart, focus on the line in between, or the kind of middle row. That what we have seen as an industry dry up is the support for non-standard lives. what we have seen is, if you can move to page 4, please. So what we have seen dry up is the support for non-standard lives. What we have seen dry up is, or we would kind of hope for better participation is in government schemes to actually reach out to the masses. Certainly we would welcome reinsurer participation in this in a very big way. And what we have seen also in businesses which are group businesses, whether it is GTL, GCL, etc., is not only has pricing gone up and maybe now starting to come down, but the ease of doing this business has also deteriorated very, very significantly. And for example, in credit, the idea is that you actually underwrite credit and there is very little reason for anti-selection because somebody is taking a 20 lakh, 30 lakh home loan and they are not taking that 20, 30 lakh home loan to actually anti-select and get life insurance claims, right? They are taking the cover to cover the loan, and therefore if we impose a lot of medical underwriting on top of a group credit product, it makes it very difficult for us as life insurers to take this to market. Pricing, capacity, ease of doing business are three challenges which have emerged. If I kind of go into some of this in detail, there are three kind of themes I would like to kind of boil it down to. One is why this is happening. It's important, I think, also for us to share why this is happening, which is item 1, in terms of how regulation or parts of regulation are being interpreted by life insurers versus reinsurers. Second, India still remains a very basic market as far as reinsurance is concerned on structures. And for this, we talk to our foreign shareholder AIA, which is in 20 different markets. Actually, they work in 20 different markets with the same reinsurers who are sitting here. But the kinds of structures that are available in other markets, to our understanding, are much more participative and, move the agenda forward compared to the structure that we have in India today. And I think third, it is fair to say this is a market of too few sellers. Honestly, today on life insurance term, if you look at, sorry, I keep on missing this, page 5. Next page, please. I'll remember to prompt for that. If you look at this market, it's a market of too few sellers. There are probably 1.5 reinsurers in this market today who are supporting life insurance business in any meaningful way. So on the next page, I'll talk about each one of these in detail. Page 6, please. So first one, in terms of pricing, recently the UNF guidelines have really helped, particularly on term pricing. But before that, there was a limit. Even today, there is a limit to what we can do on term, and there is still regulatory supervision. But what happened in the last 2 years is that while there were limits on how much we could reprice term, there were no limits on how much reinsurers could reprice their pricing to us. And I think it is fair to say that in March of last year, many of us saw pricing increase by about 40-50%. It's impossible to pass on a 40-50% increase in pricing to the consumer. I mean, one is regulatorily and second is, just from a consumer fairness perspective, it's very difficult to do that in a marketplace. Second is Section 45. I think most of us, in fact all of us life insurers, interpret Section 45 quite strictly. Our submission here is that extreme strictness with which we interpret Section 45 needs to be adopted by the reinsurers as well. Very often we start kind of investigating claims which are 3, 4, 5 years old, and unless there is material fraud, frankly, what is that investigation going to yield us is going to be a big question that we have to grapple with. Turnaround times, Chairman mentioned it today. We have specific regulations for turnaround times that we have to hold accountable to. Our policyholder protection committees look at it. Last year, Mr. Ganesh ran a very good initiative where every 15 days, all life insurers were supposed to report how many claims are outstanding and what is the reason for that, so that, there was drive to actually get these claims settled as quickly as possible. I'm not sure those same regulations are interpreted and applicable in the reinsurance context as they are on the life insurance context. COVID related, it's a point which is behind us, but the point is, I think the broader point is, what is good for the goose should be good for the gander as well, right? So what applies for life insurers should also apply for reinsurers so that we can work together for the benefit of the consumer. On the next page, page 7, please. This is the most important point. So, while I'll talk about a lot of things, I think this is the most important point, that today we have lack of capacity, as I said, 1.5 reinsurer. We have lack of facultative reinsurance. When we go out, we don't get support for facultative reinsurance. And very often the expectation is that because you don't have the primary book with us, we will not do fac with you. And the core thing is that, most proposals today are of non-participating nature, which frankly in a market like India, where we are still discovering the holy grail of what is Indian mortality going to settle at, a non-participating structure by design is meant to encourage conflict between the life insurer and the reinsurer. Example could be on a block of book. Our view as a life insurer could be that the best experience on this is 30%. But the reinsurer view could be it is 40%. And the reinsurer gives us a quote of, say 40% of the ILM table. On the other hand, what we have seen in other markets is that you have a floor, a cap. Beyond the cap, it is a non-par structure. Below the floor, there is excess, like good profit sharing. And between the floor and the cap, there is mutual profit sharing. So what that does is it converts a debate of where is Indian mortality at in this segment to a debate of let's do this business profitably together. Let's participate in this business rather than, exchange notes on intellectual challenges of where Indian mortality is or where it will be 2-3 years down the line. And my single biggest request on behalf of the industry, because we spoke to a lot of the industry people, my single biggest request to the reinsurers is if we can create the right participative structures where your incentives, our incentives are aligned to right profitable business, but bring in good pricing, good ease of doing business to the consumer, that will be absolutely wonderful, and that is what we need in the market. Beyond this, the third and the fourth point are kind of similar. Let me not kind of dwell too much on it. It was mentioned in the previous open house that we would also request reinsurers to work with us for financial reinsurance. Of course, the authority has to be comfortable with that, and we can jointly go to the authority. There are many structures that can be worked through, cash, non-cash, etc. We can look at that. But until RBC comes, until we have trapped liabilities, this will be a good mechanism for the industry to release some capital in quotes, for the penetration agenda that the chairman has laid out. Frankly, it will be a good plus and a positive for the industry over here. Last but not the least, I think innovation, when I talk to my colleagues in AIA in markets like Hong Kong, Singapore, Malaysia, Indonesia, I am amazed to hear of the innovations that they are doing with reinsurers on using data, using analytics, using technology, using external data to jointly create programs to underwrite business. For example, with one of the reinsurers who is sitting in this room, our parent company is doing a cutting-edge program to use artificial intelligence to underwrite. There's no reason why we can't do the same in the Indian market if we were to kind of join forces and make this happen. None of this is impossible, but I think we need to kind of make a start and make this happen. The last page, which I will cover very quickly, and this is more a few points for flagging to the authority. The market has its own structure. If there are 1.5 reinsurers today, there are 1.5 reinsurers today, because ultimately they have to be comfortable with the business that they are writing. Nobody can put a gun to their heads and say, write this business. In that context, we have reinsurers who have branches in India. There are cross-border reinsurers which are available. So some of the requests from the industry is, can we look at ease of doing business with cross-border reinsurers, where the branches of Indian reinsurers or the Indian branches of reinsurers are just not willing to participate. So can approvals be made use and file, for example? Can we not have annual renewals of these treaties? Can we just have automatic renewals as we move forward? And the one other point to consider is the long-term guarantee, which is, on the bottom left. If you look at, one uniqueness about the Indian market is that on mortality, we insist on lifetime guarantee. And it is worth thinking about, can we play around with that structure, exactly like we play around with health. Health we are allowed to reprice every 3 years for the same block of business. So some of these things we can pick up with the authority separately, and I'm sure the industry will be happy to work with the reinsurers to make a joint representation. I only meant to flag a few points. I will end here again with a quick kind of reminder that we acknowledge we have been through a very tough time together over the last 2 years, and we understand why some of the challenges are happening in the reinsurance world, and we are sympathetic to those. Hopefully, I think from all the data that we are seeing right now, COVID is hopefully a thing of the past, hopefully endemic, much more benign than what it was. And now is therefore, it is an opportune moment that Mr. Jain Kumar, you have requested this kind of interaction. So if we can move forward, and as I said, go back to status quo ante, not necessarily in terms of pricing, but in the way we were working together, in EODB, in new structures that we can work on together, on financial reinsurance, on innovation, on use of data analytics. I think we need that participation both ways to take that sum assured to GDP, which is languishing, to 100%, 200%, and then 300%. Again, thank you very much, and hopefully we can take this forward.
Thank you so much, Mr. Naveen Tahiliani. May I now request Mr. Hadi Riyashi, CEO of Swiss Re India, to give response on behalf of reinsurers.
So good afternoon, everyone. And great that it's great that we're able to have this discussion. Naveen will always continue to be friends after this presentation. I think that's also a dialogue that's needed. If we want to move forward, we need to be able to openly address the challenges, the hurdles, and work together to overcome them. And I think this is very much welcome. So what I would like to do is I'll try to address, on behalf of the industry, maybe share a bit of perspective and address a few of the points that were raised. But, fundamentally, obviously, some of these points will need a lot of collaboration and partnership to be able to move them forward. But maybe a good starting point is my first slide here, which is basically reinforcing a lot of what we've discussed this morning. And it seems that myself and Naveen have went to the same source, the Swiss Re Institute, to get the mortality protection gap results for the market. And it's tremendous. So when we look at across Asia, and that's a survey that we've done a study that we've done in 2020, clearly India stands out as having in an absolute sense, the second largest mortality protection gap, but also in a relative perspective, actually the most severe. So whereas we have more than 80% of households not having any significant form of protection. And so that by itself, of course, is a challenge, but equally an opportunity, which is the opportunity that brings us together today. And the chairman has already highlighted the need for insurance for all. And maybe this is not knowing that, Chairman, sir, you're going to give targets today. I did not know that. I didn't receive an email. But I still thought to put in perspective, what actually is the possible number we're talking about if we are able to close that protection gap. And these are really large numbers. Of course, this assumes we're closing the entire protection gap in India, which is the plan for 2047. So the opportunity is there for us. Now, how do we capture it? And how do we work as an industry? How do we partner together to be able to get there? Fundamentally, if we go to the next slide, so fundamentally, reinsurance across, and I can speak on behalf of my peers here as well, we like to think that we work in partnership with our markets wherever we are, particularly more so in the life industry. That's critical because we take a long-term view of things. We're guaranteeing and committing to prices that will need to be honored for 30 and 40 years. We cannot change these. So whether we like it or not, it is a long-term commitment that we're doing to each other, and particularly from a reinsurance perspective, that's a very strong undertaking and commitment to deploy capital today that will continue to hold true for the next 40 years. I think one important aspect, and maybe this is on the regulatory piece that Naveen, you addressed as well, right? The fundamentals is, reinsurance is needs to be a commercially viable contract, right? So that's a B2B business where we are both able to negotiate on an annual or much more longer, hopefully, basis, what are the terms of this engagement. Whereas, by contrast, of course, the policyholder does not have that option, and the price is just offered to him, and that's why it's fundamentally a slightly more, or needs to be a more regulated environment. The policyholder relationship with the insurer versus the insurer with the reinsurer. That said, reinsurers in this industry, I mean, we all are under the same roof, and we all transparently and openly comply with regulation. So I think that's really important as we tackle this, because we need to work together to be able to find that common ground that will allow us to move forward. So that commercial viability for both need to be there. We are invested here. We all want to grow. We all want to be part of this journey. So how do we do it, and what can we bring? So a starting point, I think, from our side is we really need to think about, if we really want to get insurance for all, we need to deliver on this target. We need to think about how we expand the offerings and the reach. So diversify from mortality to morbidity to longevity eventually. Think about shorter term products to diversify our long-term exposure and really be able to optimize the use of capital. And I think reinsurance can really help with that. Support the primary market growth. Fundamentally, we are here to also take the balance sheet of the risk of insurance companies and allow the growth so that capital requirement is mitigated and managed. And reinsurers can definitely be a strong partner to that. In fact, that's the most common use of reinsurance as well, is to be able to support the primary market growth. So on this journey that we've drawn this morning all the way to 2027, 30% or 40% growth targets, reinsurance will need to be part of that to support the capital requirement along this journey. Market stability is, I think, what we've seen and what we've witnessed over the past 2 years is a good example of how reinsurance can be a strong proponent for market stability. COVID was a big shock for the industry. 1 in 100, or Naveen called it 1 in 100. I say it definitely is a risk that need to be modeled, need to be priced for. And it was not a capital event, it was an earnings event, globally even, and that shows the resilience of the industry, but that also showed the very important role that insurance can play. So a very important role that insurance can provide and do during this journey together towards 2027 is continue to be that shock absorber and provide that market stability for us. And then innovation, we're committed to it. We need to do it. There is no other way. If we want to democratize insurance across India, we need to think how we leverage data, how we leverage technology, analytics, to be able to price better, to be able to underwrite better, to be able to distribute better, making insurance more affordable, more available, and more accessible. So that's absolutely critical for us. And there's a lot that we can bring to the table from a global risk knowledge perspective, but that's, again, in partnership. We're part of this ecosystem. We move together as one ecosystem here. So, but what is needed? So, Naveen, I took a few points on, of course, the need for capacity, need for structure, support. And I think that naturally need to come, right? So like I said, we have a vested interest to grow and work together with each and every one of our clients or insurance present here. But at the same time, I think there have been a lot of lessons learned in the past 2 years. the correction that the market has seen, I'll talk here in the context of mortality, which is protection business, which is the really important part of the business that we want to grow. So the correction that the market have seen, and if I look at our experience, is not really driven by COVID. That correction fundamentally started well before COVID. In fact, the first correction you showed on the graph, Naveen, is in January 29, and few others happened. And I think that's really an important topic for us to really understand. COVID is, you could think of it as, yes, a cat event, right, for the industry, but there are a fundamental underlying performance that has been deteriorating over the years, which shows that there needs to be a correction in a few areas. So if we go to the next slide, it's also my last slide. And I think we just need to think back. So this is, there have been a market correction, and I think we're still there. We're going through that phase. We have all learned a lot about what has happened in the past 10 years as we started the term business and the growth in that space. I would really encourage all of us. So we will be part of this journey together, right? We're part of the ecosystem. We need strong fundamentals together. And I'll put these in three parts. So one is a more balanced risk sharing. So you say participative, whether it's participative structures or otherwise, we just need a shared outcome together. We win together or lose together. That hasn't been that's not what the history says. If you look at the result of the past 2 years, there's a bit of a divergence in the results. And so thinking how we have more vested interest from insurers to share the outcome of the results with the reinsurance industry, that's possibly increasing the retention, or thinking of, yes, other type of reinsurance structures. So I think that need to be part of us moving forward, and with that will come more capacity, with that will come more trust, and with that will come, of course, more deployment of capital from reinsurers in India. The second point is on the operational and risks framework. So what we've seen also, one of the reasons why we've seen the underlying performance of mortality business deteriorate is we've seen some, over the years, maybe relaxation in the way we underwrite, in the way we manage parts of the value chain, and that eventually has resulted in, of course, tremendous growth, but also in the portfolio growing in different shapes, or having new risk profiles that weren't originally priced for. So whilst we can cover these, we need to understand what we're covering, and so having a strong operational and risk framework, going back to strengthening underwriting, building the right capabilities within the organization, we can also partner to help with that. So having the seniority to take really big decisions, to take, take high sum assured, for example, right? We need this in most, I guess, in most ecosystems or insurance market, you have dedicated teams and departments that write high net worth. So that needs special skills, capabilities, and we need to develop these. We can do it together, but that's also part of the journey. And then the last part is around data and analytics, and really thinking together of how do we invest. If we really want to grow and scale up, don't have to go into strong corrections, so we're able to capture deviations as they go and then work on them. I think one of the problems we've had is we just all of a sudden saw the experience deteriorate, and hence you've seen these shocks that Naveen showed on the slide. I can't comment on these numbers, but directionally it sounds, yeah, there was a few price corrections over the past 2 years. So how do we avoid that? How do we leverage data to a great extent across the industry to really see experience movements, even, or anticipate it even, based on risk profiles that we're taking, based on sum assured that we're taking, based on different data points that we have around geography, around medical results, and all of that. So, I wouldn't want to go more at length. I think really the message from my side on behalf of the reinsurance industry, we are invested in India. We are all here together with you. We want to forge that path. There needs to be, again, shared outcome. So risk sharing need to be more balanced. We need to really focus on building the capabilities that allow us to scale. Otherwise, we're just going to peak and then go back down. Because we probably would have grown in ways that we wouldn't have anticipated, and that's not going to help our journey to achieve the goals, either financial or aspirational goals that we have. And then investment in human capital is of course a must, but again in systems, in data, a lot of it has been discussed today. So we can also help with that, but that's really important for insurance companies to think about if we really want to scale in a significant way on protection going forward. So that's really what I had to say. We're here together, part of this ecosystem. We are together on this journey, and happy to take, we have all of the reinsurers here. We can take further discussions either in open house format or deliberate, of course, in closer groups to make this happen for us and insurance for all in India. Thank you.
Thank you so much, Mr. Hadi. So the crux of the issue is about the price corrections and whether they have been related to pandemic or they have been done before that. When you say correction, there was something wrong earlier and it was corrected. So it begs a question, what was actually an artificial model which was not sustaining was in place, and then it had to be corrected. And while the correction is going on, the pandemic comes, when the citizens of the country needed the cover the most. At that time, corrections happened, and it has really brought about more misery. So friends, yes, there has been a meeting of minds on the intent from both sides, but definitely the details need to be worked out. But Chairman Sir has said that if any opinions, individual questions, if anybody would like to ask on this and would like to respond, please welcome. From your own seat, you can do that.
Thank you for that, sir. I just wanted to maybe put this in a slightly different context. The entire reinsurance is about three pieces. One is the price for reinsurance and direct writing. One is the price, the second is the process, and third is capacity. And along with what we have discussed here, I think there are some opportunities. From a price point of view, clearly it has to reflect the underlying risk outcome. And to that extent, I don't think there is any quarrel about the direct writers or the reinsurers being misaligned. The second part is about process. And one of the biggest contributors of the process potentially can be ecosystem creation. What we are trying to assess in the entire mortality or mortality risk assessment predominantly is enough information to establish a demographic profile and enough information to establish a medical history. And therefore, any ecosystem that we can co-create across insurance companies and reinsurers to make this as an open source, to my mind, would significantly improve the process opportunity. The third part of it is capacity. And today, a lot of the capacity constraints, and we normally have this conversation where the reinsurer might feel that we should retain more. But the biggest challenge for us is implications on the financial statement and solvency arising out of retaining more. That, to my mind, a combination of an IFRS 17 kind of a framework with a risk-based capital framework clearly can alleviate a lot of that challenge from our point of view on how much capacity we have as a direct writer. And if you can accelerate that, then the entire arrangement purely becomes about saying that we are in partnership on outcome on risk, which is what we desire. We work together to create an ecosystem to make the process more harmonious. And we are able to take maximum advantage of balance sheets of each other from a capital management point of view. So to my mind, if I were to summarize, I don't think there is a disconnect on outcome objective on the price. We are all aligned. From a process point of view, there are ecosystems that we should definitely invest more time and effort in building. And third, something like an IFRS RBC kind of combination in acceleration actually gives us tremendous capacity to retain more and align this better.
Anybody else? Anybody? Yeah, over there. No.
I think what has happened in the last 12 to 18 months is the pendulum has swung completely from one side to the other side. I think there seems to be very little effort in trying to look at customized solutions or bespoke solutions. There is a risk, there is a process, but there is also risk. I think somewhere the customer angle has been completely forgotten in this last 12 to 18 months. And there seems to be a one-size-fits-all approach being adopted. Most reinsurers, rather than looking at a particular portfolio, looking at a certain class assets or certain demographics, etc., and looking at we are actually hurting our assessments, right? In a time when cover is required, and we are talking about penetration. So I think while there are bad risks and good risks, I think today somehow the market is putting everything together and probably looking at a one-size-fits-all approach. And that's probably causing even more problems. And good customers are shying away. I worry whether actually adverse selection will happen now, because good customers don't want to go through that process. And guys then who probably are willing to go through the process are not probably the best customers. So I think unless we correct this, I think we are going to be very, I don't know whether the outcomes will be better than what we expected.
Good afternoon, Chairman. Good afternoon, colleagues. I think a lot of what Naveen said is absolutely true, and I'm going to be very specific rather than keep it in an overall holistic level. And since I think as simple as PMDGBY, at India First Life, we were really struggling for capital to manage PMDGBY. We've been underwriting around inception, and we reinsured at a loss just so that we could get the capital comfort. So, and I thought it was very unfair that we had to reinsure with the national reinsurer. He was the only one who was even willing to do some reinsurance with them, by the way. But at the end of it, throughout the past 2 years, we've actually had reinsurance contracts where we've made losses. And I think that's an unheard of in the industry. I've come from a non-life background, sir. I used to work half my life in non-life. And I've never seen that happen before. And it's the first time that I've seen us being able to do it. That makes me first think that perhaps the insurance from a life perspective and a non-life perspective means different. Non-life is an annual renewable business. So every year you can actually treat it very differently. Life is a long term, and if you haven't built it in and you haven't factored it in the beginning, then you just have to grin and bear it. Honestly, that's the beauty and the gain of life insurance. So I think I just want to leave behind that even in our group term policies, we've actually had to use cross-border reinsurers rather than using reinsurers sitting in this room. We've had to accept clauses that we could not pass on to our customers. So take risks in our books. We've had risk notes in our risk management, in our RMCs, wherein we've actually said, okay, this much insurance we're taking on our books because we're not getting the insurance. And this, I think, is really not an acceptable scenario.
So I think the reinsurance rates are really one of the lowest in India. If we just go back a few years, it was lower than Singapore market, lower than Japan market. So we were also sometimes had to use a lot of justifications to our foreign partners as to how these rates are so low. So I think it's a matter of swinging between one extreme to the other extreme. Actually, it's like we are trying to revise it too fast, too much. And I think that is where the problem lies. It is not, the price correction definitely was required, but was it, the level of the correction was, I think, hurting the industry. And I think that's where there was a big opportunity for reinsurance to make perhaps a profit which was very reasonable and very good quantum of profits, I would say. Because reasonable percentage, but on a very large scale, the profit would have been really very good. So I feel that by just by extreming and moving to the other extreme, we are trying to lose the market as ensure that the sum assured penetration is coming down, the numbers are coming down on that side because people initially perhaps were worried and were taking more covers during COVID period, but that should have continued. One is the rate also which impacted this. And now we see that lesser number of people are going for big protection. So, if perhaps that could have been a little more rational, I somewhere feel that there is bottlenecks in taking the decision at the insurance end. Somewhere the decision making happens more outside of India, and the influencing the people here perhaps are understanding and they try to influence, but somehow the interaction and the coordination needs to learn improvement. I may not be right actually here, but I feel that is one of the biggest bottlenecks. The turnaround times, in taking not giving the faculty of support or these things, and they require a lot of quick decision making. So I think these are some of the issues which I just felt right here.
I also just like to build up on this point. We do understand that it has to be commercially viable for both. And portfolio, which was earlier with the reinsurer, suddenly in the middle of COVID, we were told that we will not offer protection. We are answerable to our shareholders, we are answerable to IITA, and we have to take the entire risk on the books. So I think it's not about price setting. There is no free lunch. I think it's fine, we all understand. But availability of cover or reinsurance cover is something very important, and I think that's something which we should proceed.
Can we have some voices from reinsurers? We have heard from life insurers. Yes.
Hi, I'm Srinivas Rao from Unifree. I really don't know what Unifree's contribution is to that 1.5 reinsurers number Naveen quoted. But I believe we are reasonably covering the market in whichever shape and form. I think we all need to have the context. How this low term rates came into being and why it had to get corrected at periodical levels. And if one can go back, let's say 7-8 years back, the term business was sought only by those who were ultra rich. 10 lakhs and above income people were constituting almost 50 to 60% of the term business portfolio. Taking that into account, the mortality characteristics of such segments was the driver for the low rates. It was a correction that was needed not because somebody got it wrong, it's the composition of the portfolio that got changed so very quickly. Term business, which was not meant for the lower income groups, they were more in the sense that is what was agreed between the reinsurer and insurer, suddenly started to see a lot of low income groups coming through in the term business. There is nothing wrong in penetration. The whole idea is cost would not be appropriate. So there has to be a cost correction that happened. And as you see more and more people, the weightage of high income group is much reduced and the low income group is substantial now, the price will get corrected because mortality characteristics of these two segments are entirely different. And to add the risk-related aspects, you have the information around education. Only those, just to give you a perspective, term business was brought largely by those who were very, very comfortable with investing their money elsewhere, and they were buying term business because they needed only pure form of insurance. And that is how every reinsurer looked into and calculated the premiums. Things changed quite fast. We now look into the less than 5 lakhs income category constitutes almost 70% of the portfolio. And reinsurers have to reflect the mortality characteristics in the price. And that's what I would say is the reason for the long-term price changes that have happened. Status quo ante in terms of process that Naveen has mentioned is something that can be attempted if what Sachin said could be actually implemented. The process whereby we can get comfort, both you as an insurer and me as an reinsurer, and together we can get the comfort that the right profiles are coming through to us. I think in the current scenario, there is so much of ambiguity in terms of profiles that come through to us. We believe that the profiles are in a particular way, but at the same stage, we find it altogether different. And these are some of the reasons why we have to become a lot more careful. And it would not be out of place, and I want to say this with a sense of responsibility, that reinsurance price was not entirely passed on in some sense to the policyholders, the low premiums. Reinsurance appeared as if it was more of a source of profit rather than looking at reinsurers as partners who are there to share in your profits. Now, I think once the alignment of risk happens, I'm sure that there will be more that we can do together. I believe we have not even scratched the surface as far as term business is concerned. We need to get the price right for the customer segment. And to respond to what my friend from Kotak Life suggested, that we are looking at fitting all one size fits all. No, we were not attempting that, sir. We were trying to see if differentiated pricing would be given. But in the past, because of the regulatory constraints, there was no possibility of differentiated pricing for the same product. And hence it had to be, because the product was catering to all, it had to combine all these segments and one rate had to be given. The better customers and the not so better customers were all having the same price. So these are my limited submissions. What I can say is we have a responsibility. We believe that as insurers and reinsurers together we can take this exalted goals that we have kept for ourselves in terms of giving insurance to every nook and corner of the country, and I'm sure we will be able to do that. Sometimes you may find us reinsurers as speed breakers in some sense, or somebody who applies brakes. But I would say that it's a responsibility. I still remember a quote somebody said, what enables you to drive fast? And he said, somebody said it is accelerator, somebody said I have good skills and therefore I can drive fast. There was one person who said that it is the brakes that give me the confidence that I can drive fast. So I think there needs to be somebody who needs to tell you things are not looking great. So I think the reinsurers have done that, and I'm sure that with your cooperation we can take it forward. Thank you.
I'm J.L. Sharma. I'm the Chief Executive of Another India branch. My friends Hadi and Srinivas spoke quite in detail. I just want to conclude with one example. One of the colleagues here mentioned that we need to look at a customized solution. I would like to give an example of a customized solution. If it is a group insurance scheme, chief executive gets, let's say, 3 crore cover, and the retention limit of the company is say 10 lakhs. So that means 2.9 crores is to be retained by the insurer. And the chief executive doesn't want to go for medicals. He's 65 years old, for example. The company feels it is prestigious for that person to issue the cover, but they don't want to ready to participate anything beyond the 10 lakhs. Now you tell from an insurance point of view, if you are not confident about your own chief executive's life, how can I guarantee the life of your own chief executive, whom I don't even know? It's a customized solution. The solution given by the insurer is, come on, 50-50, I'm ready to put 50-50. Are you ready? This is an example.
If I can make one last comment against Srinivas. There was a mention of cross-border reinsurance. I have absolutely no problem. I think the more the better it is, the choice should be available to the insurance companies. The only request I have is, so many people spoke about level playing field, and I would request that if cross-border reinsurers are allowed, they have a different regulatory regime in terms of capital and other things. we cannot be at a disadvantage in that sense. So if there is a level playing field between cross-border reinsurers and those who are there domiciled and having put so much of capital in this market, I think it is fair to ask that we should have a level playing field. And I also want to just leave with the thought with everybody. We are not here to make obscene profits. Let us be clear on this. I think many people may not be aware that today reinsurers have lost money what they have made ever since inception in this market. Today is a net loss for the reinsurer. If you look at 20 years of existence of reinsurers, it's a net loss. We are not trying to make obscene profits. We are just saying there are certain behaviors from insurance companies which drive the claims outcome, and we want to be fair in terms of reflecting that in our price. And if we can have a customized solution, I am all for it. You want to add something?
Anyone else who would like to? Okay, so we have heard all the voices, both the reinsurers as well as the insurers. I think the
Actually, there is a lot of disparity that exists today in terms of what the insurer knows and what the reinsurer knows, right? So maybe, and even like say in terms of exchange of data, you get at the end of one quarter, you get limited amount of information from the insurer that is given to the reinsurer. So maybe that disparity that is there, if that could be kind of reduced, I think that would really help, in the spirit of partnership and collaboration.
The fact is we are learning together about this. 20-year-old industry down is only 6 years old, 7 years old, we are learning together. The question is, we learn as whose cost. Life insurance cost or insurance cost is the big debate. The objective is not from a life insurance industry behalf, I can speak for everybody, is not to put the gun on your shoulder as insurers and take a shot. We are together in the game, but at the same time, we seek flexibility because India's market requires that flexibility. So we come up with a straight jacket approach and say, go and run the business model. Yes. Because we have to go to different segments, we have to go to different markets, we have to go to different geographies. That requires a very collaborative approach. So if the fear is we have all the information which we are not disclosing to you and we are asking you to take a risk, let's find a solver. You want to do an audit, you want to come sit in our premises, you want to be a part of our underwriting team, be our guests. We are okay to do that. But collectively, let's not become an impediment to what this country requires. That is my only solution. So I don't know where we will end up. Both sides have a point of view. Some bit of mediation from your side perhaps will be required.
Okay, I was just going to mention that. I think we've heard both the sides. And a position of sticking to your own positions. But I think the country needs insurance, and the regulator is there to provide all kinds. I think we could find a meeting point. I mean, you have climbed up too much, and they are not willing to climb. So you can sit down, they can climb up, and you can make joint hands and walk forward. So a more cooperative and collaborative approach is what is required. So in this context, I would like to set up a task force where the regulator will also participate. And let's sit and come up with the issues and then to some solution at the end of the day. So we'll set up a task force because tomorrow also we are going to deliberate on the same subject with the non-life companies. They will also have a different set of issues and the responses will be something different perhaps, I don't know. Tomorrow we get to know, but after the conclusion of this 2-day meeting, then we'll set up a task force where we'll involve the insurers, the reinsurers, and the regulator also will be a part of that setup. So then we try and hammer out a solution. I'm sure all of you will work closely to find a solution. We cannot just leave at flagging an issue, but we have to find a solution. So I'm pretty much sure that we'll be able to find a solution, given that at the end of the day, you also suggested from the reinsurance side that yes, we can find a solution. From the Insurance companies also, I heard someone saying that yes, we need a collaborative approach. So the regulator will do its bit, and I'm sure we'll find a solution. And our larger goal, we cannot miss it. Thank you very much.
Thank you, sir. Thank you very much. Normally, any session, post-lunch session was considered to be a challenge. Now I understand why Chairman sir had scheduled just after lunch. This discussion, I think everybody was excited and their point of view and their impacted in this reason. I think one of the things which are being focused is the potential of life insurance funds. The role it is playing now and what it could become in the grand vision of India. So therefore, I request Secretary General Life Insurance Council, Shri Kacharya, to come and present the role of Life Insurance Council as a growth driver of the industry.
Just a role, but how you are redefining your role and how you wish to see the council working in the future. We had some discussions in the first round, and we all agreed that it should be a more professional body with experts and industry issues. Like, for example, this reinsurance issue should have been sorted out there, unless there was a regulatory hurdles. So we had to sort of I'm not blaming you or anything, but what I'm trying to say, we as a regulator would like to foresee a body, the GI Council, a more vibrant one, and not waiting for an issue to emerge, but catch those issues while they are brewing up, and try and sort out. And if there is a regulatory issue, the council should be the first point of contact with the regulator. So that is the context in which I had appealed to the members, both live and non-live, and requested both the councils to make this body more vibrant, more professional, and more dynamic so that they understand what are the needs of the market, what is the need of the country, and accordingly align all their policies and thought process. Thank you.
We'll do that, sir. It's new to us. We do some part of it. Like I was telling insurance, we already had a meeting. The same discussion took place there. But in future, we will be more involved and dynamic in the process. We had certain points which we thought we could consider. Slide one, please. Insurance awareness campaign, which we have been doing for the last 2 years, this should continue. Reviewing the mandate from the regulator will help us to take it forward continuously on a regular basis on 12 months in a year. Somehow we are unable to take it forward in a smooth way. Now things have been, the new system has been put in place and we shall be able to take it forward in the coming years. We could consider creating a robust IT platform to showcase products of all insurance companies with links to life insurance company websites. Something on the lines of what we had about ONDC. To do that, we are not very sure this matter has not been discussed with the members, but it has come as a suggestion in one of the thematic presentations. I think this we could consider it after enhancing our capabilities and capacity in the council. A common KYC, which we can manage in the live council, which can be used by members to help them getting KYC clearance. It's also based in the framework set up by IIT. The council can also, next slide please. The council can also take lead in creating incubation, be an incubation center for fintech specializing in life insurance. Further, they could create a seed fund for encouraging startups and life insurers willing to benefit from such a platform may commit requisite funds for the platform. We can onboard some knowledge partners who will provide us, be able to conduct research in life insurance and contribute to the development of the sector. National and international trends will be provided by these knowledge partners. These are some points which we put forward. This is however not been discussed with our members. We will discuss it in the next general body meeting. And I am sure that some of these points we can take forward. That's all from my side, sir. Thank you.
known Bhattacharya for a long time. He's always to the point. And he has very briefly told what he thought about the way ahead for the council. If any of the members of the Life Insurance Council present here would like to say or make any point, welcome. Yes, sir. Anyone?
Yes. Go ahead, guys. Sir, I think from the Life Council about 2 or 3 years back, pre-COVID, we had come to idea and said, can you make Life Insurance Council stronger by actually making it a SRA, which is also one of the points I think one of my colleagues mentioned when they were giving the feedback. I think today the Life Insurance Council honestly does not have any powers. It is more like an association of sorts rather than a body with some teeth and some powers to make some decisions. For instance, I remember we worked very hard. Again, all of this was pre-COVID. I think during COVID, somewhere we were all too busy trying to manage. I personally believe that the Life Council got scattered. I mean, I used to take a lot of interest and I haven't. So it could be a very, very narrow tunnel vision from my own perspective. But I do believe that the Life Council did do a lot of work at some point in time. And definitely pre-COVID. But nothing was a decision they could take. Even if all the life insurance companies sat at the table, we all agreed on some things and we decided, yes, this is the way we should do it. We didn't have the authority. We still had to go back to IRDA, we still had to write to IRDA and request IRDA that we all agree are we still okay, but even then we would wait for IRDA to respond. I think after a point of time, what we realized is the Life Council doesn't have any authority, does not have any power, does not have any, even if all the insurance companies together agreed, they could not do anything. Perhaps we need to change that one fundamental aspect of the fact that the Life Insurance Council needs more teeth, it needs more authority, it needs more empowerment. It could work in very close coordination with the regulator, but it needs to be made into a more powerful body for it to be able to do anything. I mean, that's a view. I hope my colleagues endorse it.
Thanks for that. I think what we'll do is when we meet next Life Insurance Council, both the and general body, we can take up all the issues that, and Bhattacharya will take it up and we'll discuss it at length, right?
Yes, point well taken, man. But in my life, I learned that it's not the authority and power, but it is the soft power of being together. A lot of things can still happen. But still, if you made a point about a mandate or statutory mandate, it can always be looked into with a suggestion council. And the next very critical issue is about these are the steps really Chairman has initiated in terms of putting in place very good ecosystem players for the insurance sector to move to the next stage of growth. So the next one is about Insurance Information Bureau of India. So I would request, in fact, our Mr. who was a part of that committee, is abroad. So we have invited Sri Anuj Gulati, the CEO of Care Health Insurance Company. I would request him to come over and present on the corporatization of Insurance Information Bureau of India.
Respected Chairman, sir, respected members, executive directors, senior leadership, IRDA, and of course, industry colleagues from the life insurance industry and the reinsurance industry. This was a presentation to be made by Tarun. He's unfortunately overseas, and Tarun, Nilesh from Non-Life and I are the industry representatives. We work closely with the IIB Governing Council, the Governing Board, in helping in supporting the CEO, Mr. Punan, and we're just taking a breather. Chairman IRDA asked some thought-provoking questions in the last governing council, and I think that led us to starting to think about this more differently and more as an opportunity for all of us as we look ahead, because for all of us who've been in this industry long enough know that data is integral to what we do. And if we have a greater role, if we can all collectively play a greater role in organizing data more effectively and utilizing it more effectively, I think we can solve for a lot of things. All the bad things like fraud, so on and so forth, and lead to all the good things of more penetration and so on. Right? And I think it kind of it all ties in back there in that sense. Can we go to the next slide, please? So, can we go to the next slide, please? I think to start this body, what we needed was a mandate. What we got was in 2009 when IRDA said, let's form IIB, it was a mandate for all of us to be able to start submitting our data into one common repository. I think 2012 was the next big milestone when IIB we formed a society was formed. And I think when one goes to the memorandum and articles of association of the society, it is very broad. It gives a lot of power to IIB to be able to do multiple things in that sense. So I think again it's a very positive step in that sense. And I think what's come out of that over the last decade or so are, I think these 3-4 big items that have started to support our business, I think in some form, I don't think in a very holistic form yet, but in some form. Whether it is broad models, both on the life side as well as around vehicle insurance, property insurance, so on, some level of risk scores which are helping us to underwrite and our business much better. Cautious repositories. I mean, we all know the issue about employees, agents, so on and so forth. The fact that we can have a collective data, and again, it helps to solve for that problem in that sense. And of course, bespoke some industry reports, and of course, on a structured basis, are starting to get some information from IIB on a regular basis. Can we go to the next slide, please? So, we took a breather and we said, why don't we look outside the industry of where data has been utilized well and used effectively? And one example we saw was the credit bureaus, where, can we go to the next slide, please? Where the fact that today, for every consumer who's ever taken a loan or used a credit product, whether credit cards or a loan and so on, a complete itemized, line item-wise detail is available to all lending institutions with a score, basis which they can decide to underwrite the loan in that sense. I think it has helped grow the industry, has really helped grow that industry and has given toolkit to that industry. And of course, from there on, they've gone into fraud management, portfolio data enrichment, and giving additional industry insights and so on and so forth. And I think the fact that they've been able to now start to go out and influence the entire life cycle of credit underwriting, I thought was a good insight for some of us as we thought about the IIB in that sense. Next slide, please. So this is about loans and how they are influencing every line item, every element of the life cycle in that sense. Next slide. Next. Yeah, can we go to the next slide? So the previous one, please. So this is once again both for customer acquisition, underwriting, policy servicing, claims, our ability to be able to use what we could have in IIB effectively at every stage and be able to help our business, help us grow our business better in that sense. Right? I mean, so we just try to map taking learnings from outside and seeing how it could influence some of our. Next slide, please. These are some tools that exist on the left side which need to be scaled up. And as we did a consultation within the industry, focus groups within life, non-life health insurance, there were additional inputs we got, basically additional capabilities that we need to build within IIB, right? And those are some thoughts that have kind of come out of there. Can you go to the next slide? So both across life, and I'm sure some of these, as you go through for this room, the life insurance, some of the areas that have been highlighted, I'm sure it resonates with you in terms of what it means for your business and how you could, in that sense, benefit from the capability that it is intended to build. Can we go to the next slide, please? Yeah, next slide. So this is essentially at the heart of it, IIB is about technology, it's about people, right? I think up till now, I think a great start, a great foundation has been laid in terms of putting together the basic, getting data from insurance companies. Can we be more efficient in the way we get data? can we be more effective in the kind of data we ask for and how it is stored and utilized? I think there's a lot of room. And technology is evolving. This is a space which over the next many years is going to continuously evolve much more in that sense. But what we have again is a start and a foundation. On the people side, once again, what we have is a great start. Under the current leadership, we've been able to make significant progress. And as we are looking ahead now in terms of an IIB 2.0 and so on and so forth, there is a search for a new CEO. And the search committee that has been formed, the mandate or the terms of reference itself say 40 to 55-year-old industry-linked compensations and so on and so forth. Right? So that itself is starting to define which way this is going to go in terms of not only capability or not only knowledge about data, technology, but at the same time being able to come in and be able to help us build this and take this to the next level in that sense. The other important part around the organization structure, I think what we will, and the question Chairman sir asked us last time was, why am I sitting in this room when I'm chairing this committee? Why isn't industry running this? Because industry needs this more than I do. I, as an industry stakeholder, Chairman sir, as an industry stakeholder, said, other than other things, the one most important piece I am seeking from the IIB is, give me the map of India and let me put my finger on a village and I want to know how many people there are insured and how many are uninsured. That's the data I am most interested in. You guys decide what you're most interested in and why don't you guys come in and build it together. So the whole idea being, can we from here on, whether it is industry ownership in terms of setting up the structure of IIB in a way that industry actually owns the body, industry sets up the governance, and industry is able to give it a direction from here. Profit, not for profit, so on and so forth are discussions that we can have amongst ourselves. To see, because our objective is larger. Our objective is to grow our own business in that sense. This would be a building block for us. We could think about it a little more holistically. That was a principal thought, which I thought is a moment of great opportunity for IIB in that sense. Because it truly takes IIB from 1.0 to 2.0 in that sense and sets the stage for a 3.0 and beyond. Because when you talk about data and technology, we all know what's going on in the world around us and what we could do with it. And it's going to be never ending from here in that sense. So I think what we have now is regulatory support. Regulatory support to say where you need mandate, we will give you the regulatory mandate. Of course, laws around personal data protection and so on are something that we will have to be very careful with. If we need carve-outs, as I understand, the Credit Bureau has a carve-out within that for even personalized information to be shared with credit bureaus. So there are exceptions being made. We'll have to be careful about asking for those because we'll have to be responsible if there was a data leakage of sort in that sense as well. So, but however, as I said, I think that's the moment of great opportunity for us. That's the way we'll have to start thinking about IIB differently as we're moving ahead. And that's where I think all of us, both from the life and of the GI and health companies coming together and forming the governance. Because the more we've thought about this, again, we've up till now thought about it like we are trained to do, think about it in silence. The moment we thought about mortality and we think morbidity, there's a lot of relationship. The moment we think about both these things and think about the health data that is available out there and individual behavior that is out there, all of it starts to add up and give us a lot more insight into the consumer and their behavior in that sense. So I think the whole agenda is that how can we come together, not only pull in our own data, but be able to collect data from outside which is meaningful for our business and which helps us kind of take better decisions for our business in that sense. One thing that I want to state, I think, over the last many years that has happened, for a body which has an annual budget expense of about 20 odd crores, 15 crores is fee that is already coming in from the industry. The balance IID has been supporting. So in that sense, it's almost self-sustaining and sustenance in that sense. The moment we get more actively involved, I have no reason to believe that this would easily be self-sustaining in itself. We ourselves would, from the benefit that we are getting from it, we would be sustaining it as we are moving ahead. Can you go to the next? So I think in terms of where we are, there is a CEO search and the advertisement is on the IIB website and so on and so forth. There is an IIB 2.0 roadmap document that has been formed where a committee worked on it. A lot of consultations happened within the industry and outside the industry basis, which, and it's a document I would recommend for all of us to go through. It's very good document, very detailed document. And of course, there is a lot of clarity that emerges from the document about the support we need from the regulator as well, in terms of regulatory changes and so on and so forth. On expectations from the industry, I think the biggest one is we get more involved. The moment we get more involved, we contribute more, we will get more out of it. Right? I mean, I think a great experiment has been within the life insurance industry. Quest, because up till now, for most projects, IIB has used anonymized consumer data. Quest was one place where consumer data has been shared, right, in a very controlled environment. And I think there to have more or all industry players come on board, be able to, will make it richer and will make it more usable in that sense for the industry. And of course, as we said, expanding data, getting more data in from cutting across these silos in that sense, all of it will help us grow this in that sense. So that's what the idea was, to give you an update as well as seek your support and input as we're looking ahead and taking this to the next level in that sense.
Any views on when you come out?
I think it's a great initiative where a lot of data which can be of mutual benefit to all insurers can be streamlined through the IID. A lot of work is happening in terms of data analytics on the customer level and how we can avoid fraud and mitigate it. I think somewhere the industry also needs to come together to also look at employee level fraud and employee level tagging of negative people, because there is a way in the industry that there is a fair amount of players outside insurance companies who are doing significant fraud by calling on behalf of the insurer or on behalf of IID. Now what we find is it's a set of certain employees who have been passed any intermediary or who are floating around in the system who are getting databases. But between IIB, between people terminated from the insurance companies, there are repositories or auction repositories which are settled. I think the industry will benefit by better quality, and what is really impacting the brand of the overall industry will probably come into this. So there are certain opportunities which, together. So for instance, even if you were to, a lot of us get calls saying that, you have a insurance policy, 52,000, you're not paid, you pay this. It's quite rampant in the industry, and I think it's really causing a huge dent into how we are perceived as an industry. So between the regulator, between IIB, between each of the insurance industry, I think a concerted effort to work even with the authorities to take action. I think there's a fair amount of work that we can do, which is mutually beneficial. So, we will be more than happy to work with IIB in some of these areas. Obviously, a lot of these have been listed, and if it needs additional budget or if it needs a little bit of regulatory enforcement, I think it will help the overall industry.
I think since we spoke about reinsurance and we had a lot of discussions around that, I think mobility is very, very clearly linked to mortality. I think life insurance I've been on both sides. I was a DI company CEO for 6 years and now I'm in life insurance. I think there's a lot of thoughts going to how do we integrate mobility and mortality data. Somebody who's got a health claim in a particular company, right? He's applying for an insurance, life insurance, right? I think those data points can really help us manage this better, because this is finally insurance industry data. I don't think you should draw lines between life, non-life, motor, health, etc. Because if a customer is not intended to fraud, I think that behavior will come through in various interactions in the other space. So I think one thing I would like to urge is that maybe we should look at it comprehensively, rather than looking at the lines separately, health insurance separately, and probably motor separately. Across all lines, every customer can get an insurance score, the credit score. That can help everybody manage frauds and lead to also better pricing. Because if frauds are eliminated, then we can pass on the benefits in terms of better price.
Thank you. While I move on to the next topic, let me also just put a word that part of the regulatory mandate and enforcing the mandates is one part of it. But there are kind of reservations the participants may have in sharing data, whoever it may be.
also be properly addressed so that a satisfactory arrangement is reached, right? So that everyone willingly contributes data. It's a very important point, I think. Thank you so much, sir, for the lively interaction on this. And one more thing which is significant transition or change which is going to come about is both IFRS and Indians. We have a presentation of Dr. Manthan. I think it's He's here to present on IFRS and Indians.
Good afternoon, all. I'm standing here to make any technical presentations on this subject. I thought it was, rather we all in IIT thought it was important for us to sensitize the industry on an important subject. As we are aware, we have been talking about Indians for maybe about a decade now, and off and on we have been talking about the time when that we as an industry can implement it. Presently, can you move to the next slide, please? Recently, the framework that we have in place is under the regulations on financial statements and after the code regulations that are in place for the insurance companies. And the mandate, of course, is to follow the accounting standards that were notified by under the Companies Act. Of course, since then, the Ind AS have been implemented in the country, and there has been a gradual shift in terms of which corporates will be implementing the same. And of course, we are all aware what the index require in terms of disclosures are much more than all of us are doing under the regulations that are in place today. Of course, it's also a fact that globally countries have moved towards IFRS, and so we too need to be moving towards that. And of course, the question then is as to what is the right time to be doing the same. Can you move to the next slide, please? Now, in terms of what is applicable for the insurance industry, there are 33 Indias which are relevant for the insurance sector. And of course, two important ones are on the Ind AS 109 and the other is on 117, that is on the insurance contracts. Earlier on, there was a lot of pressure for the industry and the regulator as well, since the 109 had been notified, that we should move towards the implementation of 109. But given the discussion we had with the industry, it was felt that probably it's a good idea to move towards the 109 and 117 together. So in effect that the Ind AS may be implemented in the insurance sector in one go only, so that the pain points for the industry would be this. Given that fact, we decided in 2019 that both the standards would be implemented simultaneously. And we also decided that the final date for the implementation for the same would be notified by us once the Ind AS, once the IFRS 17 is notified by the IASB. Now that standard has now been published by the CA Institute as well, and they've also sought comments on the same. Thereafter, the standard has also been sent to the NAPRA for the notification. All of us are aware that NAPRA has also sought the comments of the insurance industry, and the industry has given its comments on the same as well. Now, NAPRA has come back to us asking as to what would be like the date to be for the implementation of the standard, given the fact that the standard is available, the comments on the same are also available. And also, we all know that 117 is not only applicable to the insurance industry, it's also to be applicable for the industry at large in the Indian space. So under that background, now what they are asking us is as to whether we are comfortable with the standard, or do we want any modifications in the same, or do we also want any carve-outs around the same. Against this background and the fact that at some point in time, the industry has to move towards the Ind AS. Also, globally, the world is moving towards the implementation of the insurance contract standard. And the date that has been notified there is 1/1/2023. Against this background, the question arises as to when the insurance sector in India would be in a position to move towards the standard, or rather towards implementation of the Ind AS. We have been interacting with the industry, and at some points in time, there has been a feedback from various stakeholders saying that it's probably time for us to implement. Some of our friends have done some exercise on the subject as well, and there have been inputs from them as to how really the implementation of the standard is moving with regards to them. Now the question is as to, is it the right time for the authority to indicate the data around the same or not? When we dwell upon the subject, we find as to what is it really that bothers us. It is on the IFRS 17. Can we move to the next slide, please? Now on the, just before I touch on as to what are the issues that we would like to address around that, which are the various jurisdictions we find are moving towards IFRS 17. This includes jurisdictions such as US, United Kingdom, Hong Kong, Singapore, Australia, South Korea. These are the ones who have said that they shall be implementing the same from 1st of January 2023. And we take into account that fact, and also that the previous year numbers would have to be also implemented. Effectively, it means that jurisdictions are moving towards it from 1st of January next year. Some of our entities, or a lot of our entities, are having JV partners as well. And certainly there would be pressure from them as well to move towards the Indian jurisdictions. The other issue that is frequently talked about is that when we are a global player as an industry, and we have a space in the global space as well, we probably need to be talking in a language that globally everybody understands. So that's where the pressure or the intent of moving towards the IFRS or the NDAs comes in. Now, when do we move towards that? But before that, what are the challenges? The next slide, please. There are three pieces that we in the authority believe need to be addressed. One is on the accounting side, the standard which will get notified by NAFRA. The actuarial side. Now, this is where the Institute of Chartered Actuaries of India also comes in. And the third part is the technology piece. Since every policy would need to be tracked, there is a lot of investment that would be required on the technology front as well. And that is where we understand that there will be a lot of capital expenditure that will have to be put in by the industry at large. Some of our players would be in a position to do so. Maybe the others will have to find resources to raise resources to ensure that the technological support is brought into the companies as well. Now, we believe that with the RBC coming into place, there will be a lot of capital which may get released, or we believe that in some cases at least it will get released. Maybe that can partly be used for the purpose of implementation of the NDAs as well. So these are the three main pieces on which we need to work on. Some deliberations that we did also was as to whether it's a good idea for everybody on the technological front to be moving in the same space. But then probably that will result in an additional cost for everybody, for every player in the industry. And therefore, we believe that there are a lot of resources that we need to put in, including the financial resources, the human resources, and the knowledge partners as well. Beyond that, there is the requirement to be working a lot along with a number of players, a number of stakeholders we have to take on board. The CA Institute, the Institute of Actuaries of India, the government and NAFRA as well, the regulators internationally as well. Maybe it's a good idea to interact with them as well on their experiences. But since a lot of players are moving in the next year only, the learnings from the other jurisdictions are also limited to that extent. Working alongside the JV partners, NBFCs who have already implemented it, the RBI, which will be or has been giving guidance on the expected loss, credit loss as well. So, a number of stakeholders we need to interact with and work on this together. And beyond that, we also believe that the buy-in by all the stakeholders is also important. Even when we are talking about implementation of the IFRS within individual companies, all the players within the same organization would also have to buy in on the implementation of the NDS. They will also have to be buying with the other players who are in the space, the economic space or the financial space in the country as well. So against this background, we would like to understand basically, of course we don't need a response right now, as to what is the level of preparedness that the industry has within their own respective organizations. You would all recall we had maybe about 4 to 5 years ago, and of course since then, there's been a lot of lag as well. We had talked about setting up of setting committees, talking about people, human resourcing being allocated to the implementation of Indians. So this is something that we now need to talk about again. And we need the industry to set in place, the place to set in place setting committees, have human resources allocated for the purpose as well. And we would say that the human resources that are put in place are people who are maybe in the middle level, so that they would be in place for the next 4 to 5 years as the standards get implemented, and we don't have a gap in terms of the education, etc. that is required. Beyond that, we want the industry to also do an impact assessment in terms of what would be the resources they would require in terms of finance, capital, resources in terms of HR, and technologies as well. All of these aspects need to be considered. And what is the level of preparedness that you will be in a position to have around what timelines? That's the important thing as well, that we need to work around. Beyond this, as we move along, as we work on implementation, we would also be putting in place certain pro forma reporting from the insurance regulator side, on which the industry would have to do reporting, so that before we go live on the subject, we have a test case or a pilot running in each company to ensure that the companies become conversant with all aspects before we go live on that aspect as well. So today, it's certainly not the intent of saying as to when exactly we are moving it, but we cannot be forgotten that the international implementation is from 1st of January 2023. So even if we're talking about a while after the global implementation, it will not be too long after that. And certainly given the fact that we've set up a IFRS committee or mission mode team as well in place, the intent is to do it sooner than later. And that's where we want everybody to be sensitized on the subject. And that really was the intent of my talking to you on the subject as well. We request everybody to go back, think about when they need to, how and when they need to start preparing, or rather when they start preparing for it right now. We are there to support you at every level, and of course, we all would be learning together. Some of our players have already done some work on that, and we would like to showcase their work with the industry as well, so that they can understand what the challenges are, and we move together on the same together. Thank you so much.
Any opinions? Yes, sir. Any comments by anyone? Yes, as Madam has said, not necessary that you have to immediately respond, but you need to definitely take note of it, go back, consult your people, and then contact them.
Couple of points from my side, sir. In IFRS, there are some parameters that need to be calculated. For example, it's called risk adjustment. A similar concept exists in Solvency II, which is equivalent of RBC that is being considered in various jurisdictions. Most of the cases, the methodology likely to be the same while calculating the particular parameters. It may be appropriate to consider bringing IFRS 17 as well as RBC or Solvency II, whichever is the framework that we think of, bringing it together. Because you know that the problems that what you get are equally applicable in the both these scenarios. Second aspect is, there is a perception that if we implement risk-based capital, the capital is going to come down. I would like to correct, it depends. Currently, let's say if you take a life insurance, possibly life insurance capital can come down. However, if it is a different industry, it not necessarily. Even in life insurance business, some lines of business might come down, some lines of business might go up. Because we should not have that perception that the moment we implement RBC, it is going to come down, because that could create potential problems for the various stakeholders in the industry. Yes.
The ideal position, of course, would be to implement both the RBC and IFRS together. probably really we cannot today say as to which one will come together, but the ideal position certainly is that the two should be implemented together. And of course, we do understand that there would be release in some cases, and as I said, it need not be a release in all cases. We do totally understand that aspect. Any other questions?
Just one point of the implementation, simultaneous or otherwise. I think what's important is we set a direction for the two together. Implementation, however, being together may or may not be possible. My own individual view would be risk-based capital will be a little easier to implement because it is all prospective. IFRS 17 will be more intensive to implement because I have to recreate the past system. Therefore, from a relative effort point of view, practicality may well dictate that it's easier to start off with an implementation of risk-based capital, followed by maybe 12 months later or so with an Ind-AS or IFRS implementation. But the point is actually valid that the direction and the framework should have to come out together so that people can build the building blocks together.
So that's the fact that we've set up teams for both, and the fact that we've also set up a team for risk-based supervision framework as well. The intent is that we're moving towards all, but when and how we will be doing it, maybe too early a day for us to give an announcement around that. That's why we are not saying which is coming first, but certainly the very fact that we've gone into the mission mode already means that we're very clear that we need to move towards the same. Thank you. Yes, please. Thank you.
Let me three comments in the open session. I'm just speaking to the businesses. Meanwhile, I would like to do one thing. All of you have enjoyed your lunch? Most who have served lunch at a minimum, I would like to introduce one thing. Today is the last working day for me. As a philanthropy person of the insurance. But when the other is going to take over as the department, all of it.
Thank you for introducing me again once again.
She's a very known figure to all of you, so I'm sure that all of you are familiar with her. And transition will be very good. Next, may I request Chairman Sir and other members to come and occupy the dais. Will we commence the open house? I would request India First Life Insurance CEO, Madam, just one small request was there from Madam. She need to go. So therefore, I request Ms. Kalpana Sambal, American Life.
Sir, good afternoon, sirs. I will start and my colleagues here. Thanks for this opportunity, and genuinely want to thank you a lot for a lot of the progressive steps which have been taken in the last few months. They do, and many more are in the pipeline, and they do take away a lot of management pressure and release a lot of management bandwidth, especially of small companies, and we can focus more on the core business. As far as Pramerica Life goes, we are truly in a mode of reset, given the recent shareholder change that we had. And the board has already given us very aggressive target, but this target, sir, which you have mentioned, is truly aspirational. We will try our level best to achieve that. As Prashant said in the morning as well, that this is GWP and not of the share in which, for a company which is 10, 12 year old or more than that, is the renewal book. My company has suffered a lot in last 3 years for new business. There is a very small growth on renewal, which we'll have to correct as and when we start building the new business. This will get corrected. It will be a challenge to that extent. The states given to us are fine, sir. Thank you. One of it is Nagaland, another Haryana. We do have strength in defense business. Nagaland, we do have a branch also in Bima, so we will look at working in that state more from that perspective. The help, as very many have mentioned, the gap between the banker companies and non-banker companies business is widening every day. So the open architecture that many of my colleagues have asked for is also will be my ask. EOM will be another challenge that anyways authority is working on. As far as America Life goes, capitalization is not a problem even for this institutional growth. For next few years, we are adequately capitalized. So thank you very much.
Another request, Madam Vishaka, CEO of India Post.
Thank you. Good afternoon, Chairman members and my colleagues. I just have two parts to it. First is to respond to the points you raised. I think I'm related presentation, and I must say it is the first time I'm seeing a chairman make such a presentation, which is extremely heartening and interesting. As I was telling my colleague here, I felt really dynamic. I'm very happy to have this chairman. So thank you very much for that. I also want to thank you for the PMGD event. I know I have pestered you and probably anybody who came within hearing distance on increasing the premium there, and thank you so much for making that happen. So regarding the points that you made, I just want to respond back on a few points. First is on the group business. I just want to say that group business has primarily two parts, which is funds and term, because group savings are not LR. In the group term, we have a lot of dependency on reinsurance, and we've been able to do a lot of business with support from reinsurance wherever we got it. On the funds business, I want to say that when the India Funds was very strong. In fact, in 2015, when I took over, one of the things that the regulator told me is, Vishaka, you need to change the proportion of group versus individual, because you people are going mainly a group company. And today, very regretfully, I have to say that we've had to reduce that dramatically, because in a scarce capital pension, and it's a good proposition, but we're not able to do it, because when you look at capital utilization, it's better to use capital on individual than on group. So group funds, we would like to do it, but the opportunity cost is too high, and therefore you don't get shareholder buy-in to be able to do the group business. That's the point of the group. On the single premium, so the single premium is primarily annuity. Annuity, we have again three constraints that I'd like to talk about. One is the fact that today's products are all long-term guarantee. Long-term guarantees will involve a certain amount of capability to be able to lock in returns at a higher interest rate. We don't have any flexibility in structure of market-linked rates. It's guaranteed rates. That makes it very difficult for us. And secondly, the capital requirement on annuity again is pretty high. Same argument of capital utilization, annuity versus retail business. We don't have a business case to put up to our shareholders on an annuity versus retail business. On the units, I just want to put a very trivial point, but there is an anomaly of a guarantee in the policy discretionary fund. It's tiny, but honestly, just at my very tiny portfolio, we had a 1 crore loss last year in terms of the compensation between paying out guarantees, even on reinstatement versus types enhancements. Solvency, yes, regretfully, and so I know, Member actually has been very considerate and very understanding about this. We will continue to have a problem. We have a challenge even in June. I'm sure you're going to see a challenge, but the good news is that we've received all the necessary regulatory approvals, so we will be getting in capital in July, so we should be back very firmly at a happy space. But otherwise, thank you for all the support that's been given. So now coming to the second section on the growth, which is the most important point for discussion. First of all, I just want to say that in the first slide, we take a lot of pride in the kind of growth that we have achieved. Even at the risk of sounding like I'm blowing our trumpet, I think it's been a tremendous growth journey for us. 2015, we were rank 22. We're now standing at rank 10, and that's been a tremendous growth rate. We ended last year at 50% by growth. So, and all of this measurement is on individual new business premium. We don't look at other business premium, as one of my colleagues had already mentioned. Constraints, what is all the external constraints? Internal constraints we have to work with. There's nothing else to do. External constraints, again, there are constraints that nobody can do anything about, like the COVID, the Ukraine war, the money markets, the capital markets. Nobody can do much about it. But the other big factor in most of the plans will be regulatory changes. What is it that the regulator will bring about which can impact our business? At an individual company level, I can do nothing about it. But I think at this group, this is the best level, and the regulator is the best person to be able to help us navigate whether we will have any changes in regulatory scenario as one of the critical factors or not. And in that, I just have, a few asks. So it's all discussions on open architecture and the distraction. Each time it will come up, each time the whole discussion goes in, and we wonder what do we need to do? Should we change our plan? Should we be looking at tie-ups? Should we be looking at other banks? I just want one reassurance that there will be no mandates. I think that's that one reassurance, please, because we're not going to ask SBI Bank to go and sell Bank of Baroda loans, right? So why should we be asking Bank of Baroda to sell any other companies' insurance policies? If Bank of Baroda wants to, that is their prerogative, they have it. But let's not make it a mandate. I think that's one request that I really have, so that we can at least make our 5-year plans, penetrations, everything on the basis of some level of understanding of what a distribution is going to look like. Flexibility around commission, rewards, recognitions, as long as customer outcome is met, I think we need to be able to have some flexibility around all of these parameters. Management expenses, we anyway have control over, customer outcome is defined in the product regulations. I think the rest of it should just be, left to the companies to figure out what they want to do, whether they want to do training programs, whether they want to do, laptops distribution, how do they want to do an incentivization. I think we should have some flexibility in doing that. That's my request. So fraud is a reality today in the industry. And there are two things that I believe that we can do at a regulator perspective, and that's where I'm bringing to your roster. One is in terms of Section 45. So Section 45 is being misused pretty rapidly because we've been told we can't refuse claims, which are less than 3 years old. We can prove it's a fraud, but we still have to contest it and find it to be able to remediate it. So one is, I know you already mentioned you're making changes to the Insurance Act. Section 45 is one of the Insurance Act changes. Section 41 people have spoken about, so I'm not going to be reiterating it. The other point that I want to make, and this is during the last point, is on the data sharing. So today we have immense amount of data available through Ayushman Bharat schemes, through the TPAs, through health insurance companies, and every other claim that's being made. I believe we are going about it the wrong way in trying to ask every company to give their data and upload it into one central server. I believe that is blockchain technology, and all that is needed is the most contested claims remediation today. Today, if you look at any of our claims remediation, if you look at any of the grievances, I would dare say more than 60% of the grievances are on account of claim remediation due to medical non-disclosure. But we are not going to be making a medical non-disclosure claim when we can prove it's medical non-disclosure and we validated it on a welcome call and on a validation call. And that gets into litigation. Today, if we just have access, has this person made a claim in the past or has he gone for visiting any of these persons under Ayushman Bharat, under health claims, under the TPAs, and if we get a yes or no, we're not looking for anything more, it will help us immensely. I believe that there is an available technological solution for data sharing or information sharing because we don't want the entire data, and I believe that can be really explored. Under your guidance and under the mandate from the regulator, I don't see any reason why we can't make that a reality very quickly. That's it from me. Thank you so much.
Thank you, ma'am. May I now request Mr. Sahan from Indian Speaker.
Good afternoon, Chairman sir. Good afternoon, members. Good afternoon, colleagues. So, first of all, thanks a lot for sitting this together. And this initiative of all of us meeting once in 2 months is a superb initiative. The suggestion, the recommendation, and the vision in your presentation were well received and well accepted. More than that, the steps the regulator has taken over the last 2-3 months have been superbly well appreciated by the industry. In the interest of time, I'll just stick to the 4 points. The first is capital. As a company, we are comfortable in the capital. We have a healthy solvency margin despite paying dividend for 4 years. Our board partner has signed the share agreement. It's awaiting IRDA and CCA approval to go up to 74%. On the business front, the CAGR asked in the GWP numbers that you gave us about 40 to 45%. What is baked into our multi-year budgets for the next 5 years on GWP is about 25%. However, new business growth, we are at about 50%. But unfortunately, as Prashant and Kalpana has said, 80% of our book is the renewal book. Whereas CAGR is only 20%. So we'll have to revisit the drawing board and see how we can bridge that gap. But it's a good aspirational target to have. On the states, it's a superb idea, it's well received, and you allocated Kerala to us. Kerala deals well with us because our shareholder and distributor, Federal Bank, has a very dominant presence in Kerala, so I'm sure we can do something out there. Finally, I think there's a no speak for all my colleagues, and I say that we're all energized. We all know this is a great time to be at the helm of our respective companies. This is an exciting time. And we look and thanks for showing us the unified vision and the unified goal. Thank you.
I now request Sri Bhai, CEO of Organised.
Good afternoon, Chairman, sir. First of all, thank you for getting that together. It's also been a good day today for catching up with a lot of CEOs not at a family so evening of that. So thank you for organizing that stuff over this event. I won't take too much time because a lot of things have already been said and there's a related point I'm repeating those. On growth, sir, your point that you made are very realized. I do believe in the industry. We need to do the milestones and how can we also I think of the 8 committees that you had asked to submit, which there's a very good recommendation that we made them, for example, that could, for example, taxation, annuity submitting, annuity taxation fees, creating maybe a separate section for life insurance. If we are going to create a beneficial social safety net for the country at large in this coach, I'm sure the government of India would also like to. So some of those things will create the demand and the right environment in which the growth can be reached. And I think that will be really important for us. As you see with yourself, there is a limited cost. We are probably the census. A lot of people are stating their views. That's what I was stating as well. But we do believe that if we do want to create a truly well broad country-wide network, then I think we can on the other part of growth, which is capital, I think pushing ahead RBC as well as the alternate form of capital that is I think those are very relevant. Do that, then I think there will be no chance for this push for growth in the street by capital. That I think will be very, very important for all of us. So those are the limited points that I wanted to make. Thank you very much for this initiative and for getting the thought together. And today I'm going to be for the next one. See what happens, we know, and then how we can do it. So thank you very much. So,
Good afternoon, Chairman Sir, all seniors at IIT and industry colleagues. I'll be implementing 4 points. Some of them I have spoken earlier as well. First is with regards to FRA. A lot of, at least the private sector is writing a lot of guarantees. And in my last video in target, we did speak about this, that it has an asymmetric relationship with solvency. So when interest rates are going up, there is an M2M which is hitting solvency, but it's not true when it goes down. And this is something that, if it is looked at, then this will release some amount of stress and capital. The second point is about open architecture, and we've been talking about it for many years. I would like to take this debate further to say why only open architecture in banks, because many of our colleagues have built bank assurance business over the last 2 decades. Many of us have built agency businesses around the last 2 decades. We should open up open. Just like it is in the mutual fund industry, there are IFAs to sell for everybody, and water will find its own level. The third point that I wanted to speak about was about telco assurance. And here one help that again your support will help. Today, for KYC, we are not allowed to share KYC outside of BFSI. If we can find a bridge between us and the telecom players, this can create a very interesting pipe and ease a lot of the doing business part of it. So that is again something that I would mark. And if you can do an add to bill, I think that is still manageable. I don't think there is a regulatory issue there, but the first one will help. So these were the 3 points that I had. Most of the other points are mentioned, the fourth around EOM was being mentioned, and thank you once again for having all of us. Thank you.
Thank you, sir.
Thank you, Chairman Sir, members, colleagues. Also to echo the voice of all of us, that we appreciate this forum. We fully endorse the reformist agenda of the authority. I also want to personally thank the authority for supporting our company through a very challenging period. We all had a challenge as an industry. Our company particularly had extreme challenges, and I would like to reassure the authority that we're now in a strong capital position and we're poised for growth. The question mark will be in terms of the quantum and the targets. Obviously, we have to go in the performance agenda, and the topics that we will be discussing is in line with our plans to grow businesses. In line with the mission that you have achieved, sir, and that all of us do, that is to provide protection for every Indian citizen. I would like to use the analogy that my colleague from Greece spoke about in terms of brakes. We need to accelerate, we need to be agile, we need to be aggressive. We need good brakes, but we need the brakes off. And I think that a lot of the topics that we've been discussing, both technical and non-technical, is in line with that, is to take the brakes off, put on our goggles so that we can really charge ahead, but in a considered manner. I similarly have 4 points that I want to talk about, and I'll use them in the context of the scorecard for our companies. Capital is a tick. We would clearly have to reevaluate our capital position in terms of ramping up growth. We've done a lot of work over the last few years, even through the challenges in terms of conserving our in-force book. Consistency 13 months is healthy, certainly in line with market movement. 25 and 37 and further on, we've got some work to do in certain areas. That has borne fruit in terms of our renewals and in terms of AUM. We have a lot of work to do to restart the growth engine in terms of our new business. That requires that we
had reinsurance support. There was a really excellent debate here today. And I think a lot of the hard discussions have already been taking place, and I certainly support the idea of a task force and would be very happy for our company to participate in that discussion, because we probably need it more than most. The third part is on the thematic subcommittees that you set up. I had the privilege of participating in the council that all of us have as an industry, and that we need to bridge the sum assured protection gap that we see in our country. The next point is distribution. And again, there's been a lot of work and there will continue to be work in terms of building distribution. We need to build distribution. But one of the areas, besides looking at the technical elements of distribution, such as commission, acquisition costs, and so on, is to professionalize the career. And I'm not just talking about proprietary, but non-proprietary as well. We have a challenge with distribution constraint because of, for example, sales management nutrition. And I would say that we certainly are above the industry in terms of levels of nutrition. We need to address that. That requires professionalizing the career as a respectable career opportunity for young people and for other segments as well. The other 2 points that I want to address in terms of leveraging and building professional distribution capability is digital. From a Generali perspective, and working now with future Generali, we have a term which we call digital, and that it's not just about driving digital, but we do need physical presence as well. But distribution capability needs to be professionalized, needs to be strengthened so that we have more reach, not just to metropolitan segments, but also to outlying segments, rural segments. And we need a differentiated distribution model to be able to do that. But it requires professionalizing, it requires having a much stronger level of oversight on distribution activity, and data is a key part of that component as well. So we have a lot of work to do. We're excited at the prospect of having an authority that is driving the industry, bringing us together. I believe we can do a lot more together than individually. And at the same time, I think that not just the collaborative element together, but it will also force us to be agile, force us to be innovative, because we have to compete. And there's more than enough for all of us to go around. So we also embrace the stake that has been allocated to us. I had a quick discussion with my colleagues. I understand that we're under-leveraged in that particular state. So we need to engage, and we need to build, and we need to develop both capacity and capability. And I look forward to doing that together with the authority.
Mr. Sanjay,
Good evening, Chairman sir, and seniors from the authority and the industry. A lot of points have got covered. Just a couple of points. What the feeling that I'm getting today is, as an industry, we've become almost lazy, because all the areas that are required to ensure growth for the industry is getting discussed. Just to name a few, I think there's reforms around distribution, which is key to development and growth of the industry, and we're talking about mistakes we have in place as far as distribution is concerned. At the same time, I think for expanding the pie from where we are is another area that we've been discussing and we're very enthused about, especially the areas of health and indemnity and the retirement as a space which is expanding big time. There is a lot of work which is happening on the annuity side. What can we do on building the funds from
So overall, in my view, expanding distribution, expanding the pie, two key things that we will be focused on and things to come. So that I think the biggest scientists have come out with a lot of recommendations which will be big time helping the industry to grow as we go forward. So very enthused and fully committed.
Either like, just a little bit.
Good afternoon, sir. Good afternoon. So thanks a lot for the information. A big special thanks for the user by M16. We find for the first UI today. It's really very nice. So that's a big one and actually. Also in terms of some of the technology, what's needed expectations in here, very I said. We will take our best effort to actually do it. Everyone in specifically has a rebooted instead. You can easily move into a digital learning applications. Purely driven by data enabled. In fact, this product range has totally data enabled analytics. So that's going to be a little extra into that actually a little cautious. So initially, we want to kind of test it out before we go big time on that actually. Having said that, we are not fully digital and we very much part of the digital ecosystem. It's basically means that we're also going to partner with technology demand distribution lines. When we actually approach some compliance requirements from their perspective is something which is kind of holding them back to kind of participate wholeheartedly into this distribution. So rather than considering them what basically can we carve out a specific category for insurtechs or fintechs and make the ongoing process or the regular compliance requirements a little easier. That will be a big help on actually leveraging on the entire digital distribution system. So that's one specific question I had. That's the rest is something. Thanks again for this.
I think almost all points have been covered. I was just reflecting on the reform request. I think very nicely I've seen focuses that while there's a lot of focus on policyholder, I think there is a very right balance in looking at areas which impact the shareholders as well. So thank you so much for this. It is very important that shareholders need to be right space to ensure that the protection gap can be covered. So one thing which we do, I heard you in the insurance conference, you were spoken about UPI. And UPI is one example, and Sir also said in that meeting that the way UPI has grown, and today you go to a vegetable vendor, only anybody, everybody is using that. I think a similar kind of thing, if we have to move to that kind of protection gap, move to that kind of thing for every Indian, I think there has to be UPI, as Sir said last time around. And I think I will end at that because I think almost much very good. Thank you so much, sir. See you at the also today. So
Next, we are hearing healthcare. Bring the chairman, responsible CEOs, and starting from it's says it's very important. So, very powerful trust which we have imposed justified, fully justified by discipline and culture. They see the data last year, we have approved or we have processed more than 500 reports. Now, with the current reforms, at least 50% of that, almost 100% of that are mobilized, at least 50% of those in the life sector would not it gives a lot of flexibility to all the companies to meet the changing needs of the market, be dynamic in the area of launches. In addition to that, the products that are still under pipeline use, they have given a lot of flexibility in the modifications. For example, energy products. Energy there, the rate of energy mostly depends upon the locality and the industry. There is some flexibility out there. For example, if the longevity is improved, you would change the premium rates, you would change the annuity rates up to 5% without sending it. Now that 5% limit has been combined with the other factors. Up to 20% change in the annuity rates you can do depending upon the economic situation that you are having experience without waiting for the. So this saves a lot of flexibility. In addition to that, there are many regarding the ability to recover losses. When there is an inflationary environment, we expect that the company takes into account the impact which it will have on the claim costs as well as the other inflation costs and the expenses of that. As far as operational resilience is concerned, we expect the companies have the ability to prevent, to respond, to recover, to learn from all the operational disruptions that they are caused by the environment. Now, gone are the days when there are disruptions of few hours, like they did not, like their security, like their political disturbance. Now we have seen these operational disturbances can go for months, and we have all well hybrid models where the different working environments, work from home, work from office, work from other locations, will have experienced. Now you have to come up with the solutions so that these experiences can be used to reduce the cost. These experiences can be used to have a positive impact on your profits and so on. In addition to that, there are some disruptions. I know in this also there are some companies which during the last year are subject to cyber attacks. You know, this is a very, very relevant thing. We have to be very careful that other companies will not be regulators information against us. This is one company which has been subject to cyber attack. In the last 2-3 days, there is no operation, nothing is going on. And it's not one company, it's not which the climate change brings. We have to take into account that also. We have been talking about insurance inclusion. Now it's not only about insurance inclusion, it's the diversity and inclusion within the organization itself. Within the organization itself, I can say, it means that by decision making, you have to take care of the diverse experience which the other employees have about a particular aspect. It's not just discipline policy. We have seen that discipline policy and organizations, but in addition to that, I was happy to note that in one of the CEO they are planning to engage with the younger workforce and organization so that they can have a different perspective. This is the area which we have to work. Now there is a relationship existing. In the past, there was a relationship still exists. That there is a regulator and there are regulated entities. Now, taking that relationship still exists, but now the new area is that we are partners in the group. Let us work together. Let us work together with the common objective of that well-mental agenda that insurance reach every household in the country. Thank you.
Challenge together because we are really parents and seniors. Like, considerations and duties and all of you. So we had a great day. So first I should congratulate all of you for the performance of financial year 22 as well as
2 months. Of course, I'm sure that this year also will be doing good. But what we learned so far, you would have perceived from your company point of view. But after the chairman has come and after the first meeting and this meeting, we have started perceiving in another way, like we have started perceiving an industry under India fully, like every line will be covered. So in that angle, so now there is also a combined effect, cohesiveness among us, the insurers, the reinsurers, council is supporting, the data is there from IAB, IRDA is with you. So I'm sure the synergy effect is going to be excellent. Of course, the premium will be 1+2 will be 3 only, but the synergy effect, what we are going to get, will be the visibility is going to increase, customer awareness, and then the penetration. So finally, it will be beneficial for all of us. Growth also is going to be there. So I will once again request you to concentrate more on PMJJBY, whether with your bank assurance partners or anybody that's important. And please participate in the sandbox. We want more products to come in the sandbox. And I can say it was not discussed. It's not only on this, even Chairman actually we were discussing as a part of the committee report, only on the taxation part. What can we do for the industry, like anything on ATC, beyond ATC 1.5 lakh. So the industry has already recommended that is in the pipeline. I was telling him it is only next budget. So what are we? He said, no, we should start discussing with them. Probably IRDA has to see yesterday there was something disturbing I read. In the GST, the services which are exempted, IRDA is withdrawn. So probably that could be, I don't know, we will review the fees what you are paying now, we say exempted, probably we have to collect service tax on that and you will have a input ready that we have to report back to you. But there is a notification that the exemption given to IRDA and RBI, SEBI, all are withdrawn. So that is what I thought maybe a shock I thought I should tell you. And I will request some of the life companies have shared, they have demonstrated how the PCs, the banking correspondence can be used so that we are reviewing that. Similarly, I will request, I think really Netlife for talking about the internal ombudsman, what they are practicing, so it will be helpful for us. So let us have that to review at our end. So this is all from my side. All the best. We are together, we will work together and we will see the penetration is there and visibility is there and together we are good. Thank you.
Good evening, Chairman sir. All of you are looking forward to our reunions, so I'll make it very short. First, a few housekeeping points. One, we are not uploading onto the CKYC platform in Zelsa. Please, I would request you to ask your people to start uploading on Zelsa CKYC. Now, the last point, a bit of thought-provoking point. I was discussing this with one of you. I was also discussing this with my esteemed colleague, Member Life. One of the chairman had made this point very, very clearly. We are notorious. No? We are notorious in the media for rejection of claims. I don't really know whether we reject those many claims or not, but we are notorious. And today, honoring the claims are
gracefully accepting claims is genuine. When we have every right to reject in the interest of responsibility. That's very important. So, actually, the claim is the customer the claim is rejected. We let us believe that the aspect that
And let's create a system within the company where there is an agreement which can be independently the respective judicial person or somebody can be there. This kind of review mechanism is sitting in the company to enhance the credibility of the So that's, I would request Chairman sir to
So, we are at the end of the session. Just to remind you that the travel time from here is Chandrabhatla, Redismite and around an hour and 10 minutes. So you'll have to factor that time and reach there. Let's all reach there by 7:30. The so-called challenging targets that have been assigned to each one of you. So that's the biggest takeaway for me and for all of us here. The second point is with regard to various initiatives that the IRDA is taking based on some of the recommendations that have come to you and some flow motto from our own side to provide all of you the ease of doing business and reducing the compliance burden. This process is on, and I'm pretty much sure, working with our colleagues here and my colleague members, that in the next 2 to 3 months we intend to finish off the various kinds of initiatives and reforms that we wish to undertake in the first go. But that doesn't stop there. And as and when we come across an issue, a problem, we certainly try to surmount that by paying adequate attention. Another key takeaway is that all of you have also agreed that technology is going to be the driver of growth. Technology is going to be the game changer. Technology can change the way insurance business is being done in this country. It will help you in better underwriting, it will help you in better pricing, it will help you also in processing the claims and a better turnaround time. And therefore, the customer satisfaction and also the trust and faith in the product, insurance and the product. Data, we discussed about data, and one of our colleagues here, Mr. Gulati, made a presentation, an excellent one, as to how we can leverage the platform that has already been created and take it to the next high level. We all will agree that the value of data still remains unlocked as far as the insurance industry is concerned. And as we go along, data is going to be again the game changer in this. If you look at our counterpart regulators, RBI in particular, they've already floated given licenses for the account activity. The UPI, we see the payment and settlement system, how it has progressed in a very short time. So I would like to challenge all of you that why don't we create a UPI-like movement? Why can't we turn the IIB into a data repository which will be dynamic, which will give you all kinds of information and all kinds of technological tools like AI, ML, blockchain? How all of that can be embedded into the insurance segment? The InsurTech conference, in fact, gave cases, use cases, and how they demonstrated that how blockchain can work within the realm of the insurance industry. We would like, when we meet next in the InsurTech conference, some of you and all of you, in fact, I'll be inviting all of you, but whoever can attend, it will be definitely building to years that how technology can help you in moving forward as we go. So, these are some of the key takeaways, but let me assure you that we stand committed to the growth of insurance in this country and will do whatever is required to be done. But the main theme of our approach will be more of a collaborative, cooperative approach, take everybody along, try and strike a balance between things, but as far as the policyholder interest is concerned, that will be at the top. So keeping that in mind, around that we will try and build the regulatory framework, and I am absolutely sure that the entire team of the IRD are absolutely enthused and ready to go. The members are putting all their efforts, put things together in a short span of time, and I'm sure as we go along, you will find doing business in this country will be absolutely different than what it used to be earlier. So wish you all the best, and hope to see you again 2 months later from now. And that will be again a new venue. Instead of biryani, maybe have something, a new savory. I don't know. That is for sure. So I've already asked them that the travel time is an hour and 15 minutes. I think we'll close here and see you at dinner time in a more informal manner we can chat. Thank you very much. Now, Mr. Bhattacharya would like to present a bouquet to our esteemed colleague, Mr. Jain, on his superannuation.
On behalf of that industry, just get them. Yeah, come on.
Request. Respected Chairman Sir, members of the authority, CEOs of life insurance companies, Secretary General, Life Insurance Council, CEOs of insurance branches, GIC, MD of IARM, CEO of IID, CEO of Airtel, my colleagues from IRDA, ladies and gentlemen, it is my privilege to propose a vote of thanks on this occasion. I, on behalf of IRDA, extend a very hearty vote of thanks to all the speakers and participants for sharing their free and frank views on a variety of issues that were discussed during the course of the meeting. I would like to thank Chairman IRDA for setting the theme of the meeting, which was Bima, Manthan, the road ahead, and sharing his vision of the insurance industry over the next 5 years. I would like to thank Mr. Naveen, CEO Tata AI Life, for highlighting the various reinsurance issues, challenges facing the life insurance industry. I would also like to thank Mr. Heidi Sristri on giving the reinsurance perspective on issues raised by the life insurance. Next, a big thanks to Mr. Bhattacharya, Secretary General Life Insurance Council, for sharing his thoughts on the role of council as a growth driver. I would also be grateful to Mr. Anush Gulati, CEO, Care Health, for his presentation on corporatization of insurance information bureau. Mr. Gulati has given very valuable suggestions for the overall development of the bureau, which are very pertinent. I would also like to thank Dr. Manthan, the Executive Director, for making a detailed presentation on IFRS, which gave an insight on what life insurance industry can expect going forward. Last but not the least, I would like to thank the officers and staff of the administration department who made such wonderful arrangements and organized the whole event in such a professional manner. I would also like to thank the IT team and the catering team for making it as a remarkable event. A big round of applause is also due to the team of youngsters in the chairman secretariat who worked diligently in putting the whole event. Please, the youngsters of chairman's office, if you kindly please. Yeah. So we have Shruti Srivastava, Bhattacharya Secretariat's office. So they really work very hard. I would also like to thank my colleagues in IRA for sharing their learnings and giving constructive inputs. Mr. Chairman, members and the members of the authority, all the esteemed CEOs, as we bring to close the event today, may I request you to please join us for dinner at the Sikandra Block. Thank you. Thank you.